All right. Good morning, everybody. Pete, you checked them out. Yeah, I wasn't saying they were a scam. Well, Nexgen is just a name, right? We don't have any, and it's not Nexgen. It's Nexgen Futures Trading. So um, it's just a company. Good morning, everybody. Good morning, Erla and Steve. It's just not our company, and there would be potential for confusion there. So I had somebody send me the link. I appreciate it. I just thought I'd share it in the room. We've seen it before. Someone else brought it to John and said, "Hey, I tried to sign up for one of your accounts, but and John's like, "Yeah, that's not us." Good morning, Hamid. Good morning, Luciano. How's everybody's weekend? You guys have a good one? Let's not get straight into business. Let's be friendly. I hope you guys had a great weekend. Hope it was nothing but sunshine and happy. Not too much sunshine. Got hot here in Texas. Guys, we're going to do what we do today. Same thing we did Friday, same thing we'll do next Friday. We're going to talk about patterns a lot. We're going to talk about rules a lot. We're going to talk about the easiest way to become successful. I had an awesome conversation this weekend with one of our new students. She was in town. Um, and we talked a lot about the learning path. So I'm gonna share some of that conversation in the room. But first, we've got to check news, guys. Today is Monday, July 15th, and at noon today, Fed Chair Powell speaks. So, guys, as the classroom ends, um, Powell is going to speak. It is high impact, and it definitely has the potential to make the market go crazy. I choose not to trade anywhere around high or medium impact news because I can't predict what the insane reaction may be. And that's actually the first advantage that I give myself every day is just not trading into news. Excuse me. Everything that I talk about each and every day, guys, you're going to be able to find it on the NextGen website. There's two drop downs in the education that I think are the most important. You've got the trading guide and the software guide. The software guide is where if you have a NinjaTrader question, you're like, oh my gosh, how do I set up stops and targets? I can't seem to scale my chart. How do I activate a limit order, right? All of that's here for you. The trading guide is where the trading rules come from. This is where everything that I talk about when we're talking about advantages, when we're talking about high probability trend trades, everything comes from here. Guys, the glossary of common terms is a great way to get familiar with what you're looking at. And this goes back to the conversation that I have. If you come in day one and you've never even looked, if you haven't watched one video, anything like that, it becomes a little difficult to understand what I'm talking about. So come through and look at what is one-to-ones, divergence, reversal bar markers, all these different things. And then what we're going to focus on this morning, the same thing that I focus on each and every morning, guys. Good morning, Zorro. Is going to be the high probability trend trade. This trade, where each indicator on every chart agrees for the rules for the trade, this is when the triggers are the strongest, when no termination conditions exist. There's nothing between you and your targets. And guys, the way I teach this is a high probability trend trade. This is a trade that has the potential to win 70 to 80% of the time. They say that success is derived, or confidence is derived from the memory of success. And that's exactly what this trade's designed to do, guys. It's designed to build up your confidence. It's designed to develop trust in the methodology. But most importantly, it's designed to turn you into a chart reader, guys. Being able to look at your chart and understand what the indicators are telling you. And chart reading, much to the dismay of most of us, is about 90% of your day. 90% of your day, guys. In a 6-hour day, right, 360 minutes, only 36 of those minutes are probably going to be spent trading. But the rest of them are going to be looking at indicators, waiting for advantages, making sure that you're recognizing a pattern. No, 10K, if you go to Apex, it's everybody. They are having challenges. They have issued all sorts of things about Tradeovate having problems. They overhauled the entire whatever this weekend. Apex is having some growing pains. Always go to their website if you're having trouble, because right in their news section they'll talk about everything that they have that's going wrong. But Apex has even issued, hey, if you're on Tradeovate, don't trade, flatten, get out, don't trade. That's what Apex said. Um, yeah, they're struggling today. Um, Guys, chart reading is most of the day, right? Chart reading is looking at indicators and understanding what they're telling you. And when you get solid with your chart reading, you're going to understand where the market is likely to go, where the market is likely to stop, where it's likely to continue, and you're just going to incorporate those into every day, guys, focused on that high probability trend trade. Your ability to read your charts is going to take you to what we call a medium probability trade, when most of your indicators line up for a trade. However, an issue exists. This is going to be the vast majority of your trades, guys. Medium probability trades are going to show up more than the high probability. But the lessons that you take from high probability are going to set you up to take the medium probability trades. When executing these trades, you're going to take them and you're going to manage them a little more assertively. Your ability to read charts will allow you to manage assertively. If there's trouble in your way, you may take a portion off at the trouble. Your chart reading will identify that trouble. And you'll be able to reduce your risk at the trouble spots, get to a zero loss level. And guys, medium probability trades, honest to goodness, are going to be most of what you're doing each and every day. So getting those very basic skills that the high probability trend trade gives you are going to pay huge dividends. And then we talk about this every day, guys. If you want to get to where you want to be, the best way to do it is post your trades in class. Just tell me what you see. When you're looking at your charts and you're talking to yourself and you think it's time for a trade, write it down on the chart. Make sure that you are talking yourself through every trade. And most importantly, make sure that you're talking to yourself in terms of the advantages. And the advantages are pretty simple, guys. It's only 3 rules, and it's only 3 advantages that come together to piece a trade. So make sure that you're posting in the room. Make sure that you're identifying advantages. Really get vocal in your trading. Scare the pets if you need to. And then the second is use the spreadsheet that Nexgen provided, guys. I give it to you guys every day, and there's 4 tabs on it. There is the trade tracking. This is your trade journal. You need to come back and study this every day, see what you did, see how you can do it better. There's a section designed to give you some place to build your trading plan as you create your awareness in the market and you begin to recognize these patterns. There's the client trades, where you've got over 350 pictures of Nexgen users using those advantages to enter trades to get paid. There's the entry sequences for the high probability trend trade, management, patterns that repeat themselves. All of these things are available to you guys. And the more you fill out the spreadsheet, the more you make your section, the favorite look section, look like the client trade section. That repetition creates recognition, guys. So don't be shy about posting in the room. Don't be shy. Annotate your charts, guys. The more information you give yourself, the better study that you have. We're going to learn the rules. We're going to talk about the high probability trend trade. We're going to focus on the advantages created by the indicators and how to enter. And that's going to be the first part of what we do, guys. It's simply entering the market in the correct spot, because great entries create very manageable trades. You guys can simulate. Don't be afraid to simulate if you don't think you're 100% yet. Go ahead. Pull the trigger. I think this is a long trade. I'm going to get in long. And be okay making mistakes. Be okay not knowing everything. Be okay being brand new. Traders are notorious for self-imposed pressure. Man, I know that I'm brand new, but if I'm not profitable, well, then I suck, and I don't even know why I'm doing this. And guys, you're learning a brand new skill. You're learning $1 million skill. So make sure that you're practicing, but post it in the room. Let's talk about it. There's no behavior that I can't correct. And a lot of times as a brand new user, you're not going to recognize that you're breaking the rules. You're not going to recognize that you're taking chances and risky trades. And that's one of the things is this classroom is designed to give you feedback on everything that you do to help get you to where you want to be. The goal is that you don't practice the wrong trades eventually, that you get to the point where you're focused on the rules being met, because the rules provide an advantage. The rules have been proven to win more than they lose. So that's the goal for everybody, is not to become this super trader, but rather become this amazing rule follower. And you'll be surprised at how well it works out. Nothing teaches good decisions like a couple bad decisions. What's that one? You can't get experience, or experience keeps you from making bad decisions. And how do you get experience? By making bad decisions, or something like that. There's a more eloquent way to say it, but it's pretty much the same thing. But you're absolutely right, guys. Sometimes you got to get punched in the nose to realize that you shouldn't be doing what you're doing. And then we're going to simplify. We're going to talk about the high probability trend trade first. We're going to focus on those 3 simple rules, guys. We're going to talk about momentum and a clear path in an entry area. And I posted this picture in the room earlier. I'm going to bring it up for the classroom. And I hope that's not too busy. These are your rules, guys. Your rules create advantages. Rule number 1 gives you the advantage of momentum. Rule number 2 will give you a clear path. And rule number 3 is just identifying your entry area, that point where the market is most likely to continue. This is my focus for the first hour every week, guys. When all 3 rules are met, your trade is high probability. You found a trade that typically wins 70 to 80% of the time. When only 2 of your rules are met, it becomes medium probability. You no longer have the expectation of winning 70 to 80%, and that's why your management has to kick in a little bit. That's why you got to be a little more aggressive. And you've got to rely on the other 2 advantages to carry the absence of the third. And if only 1 is met, guys, and then I just put kind of being funny here, seriously, why would you give up 66% of your advantages? Why would you give up 2/3 of the things that are making you successful? And guys, if you start on day 1, I'm only going to trade if my rules are met, because I know there's advantage, and this is a business, and I'm in it to make money, not be active. It's gonna be great for you. And then once you understand momentum, once you understand a clear path, guys, your entry area is going to change. It's going to grow with your abilities to read your indicators. You're going to find more entries. And you're going to find yourself capable of taking trades that you never thought you could take once you understand momentum and a clear path. There's a lot of opportunities that rely on those 2. So that's what we're going to do today, guys, is we're going to talk and walk. And what I realized through conversations over the weekend is that it's easy to focus on the trades, if that makes sense. It's easy to focus on the finish line. You're looking to break through that ribbon at the end and get your participation trophy. When if you really keep it simple, if you really keep it focused, if you really keep it as basic as you possibly can, these trades begin to jump off the screen at you. And guys, everything starts with strong triggers. Your high probability trend trade is those 3 rules, and those 3 rules are going to happen on only 2 charts. And what I realize is that a lot of people are so interested in finding the trade that they forget that it's 2 charts. So I'm going to do little pointers for you here. Write down that the large chart leads the way. If you're a note taker, write down that the large chart is going to give you 2/3 of your advantages, that they have to be met before you ever look at the small chart. And the large chart first is going to define direction, guys. If the background on the large chart is green, then the market's going up and you're looking for rules to go up with it. And if the background is red, the market's going down and you're looking for rules to be met to go down with it. And guys, it's pretty simple. That takes away 50% of the potential decisions. It's going to define momentum through rule number 1, and it's going to define areas through rule number 2, those areas that might create a problem. Your small chart is nothing more than an entry chart, guys. This is a way to get into the market. And it refines this big slow chart. We look at 1 bar on the large chart. Your small chart is 20 to 30 bars. It's really a dissection of 1 bar on the large chart. And this is going to allow you to pinpoint where the market is most likely to continue, to give you that lowest risk, that highest profitability. And guys, that's rule number 3 for entry. And again, once you understand what the large chart is telling you, your entry rules are going to change. But we use 2 charts really just because one is the large chart is the large crowd. The large chart are the people that move the market, the people with the money, the big money investors, the institutional traders, whatever you want to call them. These are the men and women that when they want the market to go up, it goes up. And these are the people that create the advantage of momentum. And these are the people that are going to react to key areas on your large chart that could be problematic for those of us that are not a part of the large crowd. But once these guys give you what you need, there's always a small crowd that fights them, guys. The market is nothing but ups and downs. The market is nothing but fluctuations. The market goes up, it retraces down. By embracing the small crowd, we can see the small moves within the big moves. And this allows you to capitalize and to enter the market where the small crowd typically fails in their fight. And they typically fail 70 to 80% of the time, guys. And you're going to be able to pinpoint right where the market is most likely to continue, right where that small crowd will fail. And you're going to do it with these 3 simple rules. So we're going to focus on momentum first, guys. Momentum is first for a reason. Momentum is the basis for so many trading plans. And momentum is the reason that the market pushes. And momentum can break key areas. And momentum can cover mistakes. And guys, get good at momentum. And it'll take you about 3 minutes to do it because momentum uses these trigger lines, the T3 trigger lines. There's 2 parts. There's the small triggers, which are the solid lines, and there's the large triggers, which are the dashed lines. And here is, I'm going to go over direction one more time, guys. If the background on your large chart is green, the market is moving up, the big crowd wants it to go up, your highest chance of success is only looking for rules to be met for high probability trend trades long. And when the background is red, your highest chance of success is only looking for high probability trend trade short because the market is going down. So trading with the trend, guys, that's your first advantage, really. And the only way that you can have strong triggers on your large chart, the only way you will ever have that advantage of momentum is if the small triggers and the large triggers are both green, the same color as the background. So green background, green large, green small. That's the only way you can ever have strong triggers. And then when the small triggers break above the large triggers, when the large triggers are wide, they're angled in the direction of the trend, it looks like scissors that have just opened. Guys, that is momentum. That is strong triggers. That is a market where the odds are favorable for the market to continue up. And you're going to hear me call this in class all day long. Odds favorable momentum. Did you have odds favorable momentum? You're going to see it annotated on charts, OFM. And odds favorable momentum pushes the market. Odds favorable momentum can break key areas, and odds favorable momentum can even cover mistakes. But when we have that best of the best momentum, you're going to see these tails or these wicks. And this is where the refinement chart is going to allow you to pinpoint right where the bottom of that tail is most likely to form. This is going to become your entry for the highest probability trend trade. You're not trading these tails, but rather you'll be able to come back historically and study these trades by circling these tails. In a downtrend, when the market is red, your small triggers must be red. Your large triggers must be red. Guys, the colors have to agree to have strong triggers. It's the space created between the two, those scissors opening, that lets me know that the odds are favorable for the market to continue down. This is the best time to sell Fibonacci resistance. On the smaller, faster chart, you'll be able to pinpoint where these tails are most likely to form. It is the look that pushes the market in the direction of the trend. It's the look that can break key Fibonacci areas. It is the look that can cover mistakes that new users make, guys. Rule number 1, odds favorable momentum. And it's not a difficult thing to recognize. It's a separation between the small and the large. Does everybody see it? It's that separation between the small and the large. And guys, When you see tails with that separation, there may have been an opportunity for a short trade there. There might have been a way to get in to capitalize on that momentum. And you'll notice that strong triggers do, in fact, break through areas. So go back on your large chart, scroll through it, take pictures, and say, man, these are strong triggers. That's my first advantage. And I like to teach both sides. So it's easy to say, hey, look for strong triggers, and that's always your look. But I think it's better if you understand what it looks like when your rules aren't met. So guys, this is small triggers returning to the large triggers. I'm not sure who's messaging me, if it's someone from here, guys. I don't check them during class, but I can hear them. I need to figure out how to turn that off. When the small triggers return inside of the large triggers, guys, we call this a weakening of the large triggers. So it's the opposite of strength. If this is the best of the best, guys, this is the weakest of the weak. This is a look that lets me know anything can happen up or down. You'll see that annotated on charts as well. ACH, anything can happen. And it's exactly what it sounds like, guys. When you have weak triggers, you're going to see deeper retracements. You're going to see markets that reverse. When you have weak triggers at key Fibonacci areas, this is when those areas typically hold. So if we open up the large chart one more time, guys, let's see if we can find some examples here. A lot of momentum in the S&P. There's those weekend triggers right at an area, and sure enough, it bounces up. And if we come back up, man, they killed it on Friday, didn't they? There's those weekend triggers, and sure enough, that begins the move down. So what you're doing is you're putting yourself in this position where you start to trust in the idea that strength can push a market and that weakness just robs you of your advantages, and you'll get to this point where you're willing to sit on your hands and do nothing without these advantages. And guys, right now I've got small triggers below the large triggers, and I've got the large triggers wide and angled down. And that market does not appear to be moving for whatever reason. I may need to make sure that I am still connected to data. I am. Does anyone else have an S&P that's stuck? Nope, it's moving. It's just not moving much. This is odds favorable momentum on the most current bar, guys. Can you guys give me a why? If you're with me, especially new users. This is kind of the run of the day that you're going to see. Anything can happen triggers down here at the bottom. Look at the reversal. I don't even have Fibonacci areas on this chart. This weakness precedes a reversal. That reversal establishes that odds favorable momentum, OFM. There's one of those tails where you guys will be able to pinpoint. The market continues up. The triggers weaken, and sure enough, another reversal. Odds favorable momentum is established. There's one of those tails, potential trade. Is everybody with me? Can you hear me in here? Quiet class today. Sip your coffee, guys. Okay, just wanted to make sure. And then, guys, this is why I talk about the colors having to match. This is why every day I say red is up and everything has to be red, and green is up, or red is down and green is up, and everything has to match. Because what happens is when the buyers and sellers, when the people in control start fighting one another, you're going to see colors that don't match. You're going to see red backgrounds and red large triggers but green small triggers. And you will instantly say to yourself, I don't have the advantage of momentum. You might even see a green background but red triggers, and you'll have to say to yourself, I don't have the advantage of momentum, guys. And in this transition phase where they're fighting, without odds favorable momentum, don't try a trade. But this is where a lot of people start to get, I don't know, they put their Swami hats on and they try to predict what the market will do rather than waiting for rule number one. And this gets into traders into positions without the advantage of momentum in a market that isn't likely to push up or isn't likely to continue down. And rule number one will help keep you out of consolidation very often. Rule number one is that's the rule that I just don't break. I've got to have momentum because it creates all this confidence. And guys, once the buyers and sellers are done fighting, it may be a minute, it may be 50 minutes. 90% of your day is reading indicators. someone's going to win. And when they win, they love to establish odds favorable momentum, and sure enough, there it goes. So, guys, rule number one is the one that pushes the market. Rule number one is the reason that those trends continue in the direction. Rule number one is gonna help you when you reach these areas. They're gonna let you know that areas have the potential to break. It'll cover mistakes, guys. And rule number one should be met before you start looking for rule number two, also on the large chart. And rule number two says termination conditions false. No areas in your way that are likely to stop the market. So if I have momentum, I'm looking for these lines on the large chart. And guys, I say lines on the large chart for a reason. Don't give one more power than another. And I had this conversation yesterday as well. They're lines on a large chart. They do have names. Divergence high, red resistance, yellow 1-to-1s, blue support, divergence lows, which are magenta line or cyan lines, which means light blue. These lines on the large chart, guys, can be trouble. These lines are where the large crowd makes decisions. These are where the buyers are buying and the sellers are selling. These can stop the market. These can reverse the market. These can create untradeable bounces. And one is not more important than the other, and I can't stress this enough. So when you talk about termination conditions, just refer to them. These are lines on the large chart where fights may happen. And you're going to use your trigger lines, the same ones that create momentum. They're going to let you know if these areas are likely to stop the market. They're going to let you know if these areas have the potential to break. Or they're going to let you know if the areas have broken and rule number two is met and it's time to look for trades. And it's the same recipe every time, guys. Price has to reach the line. Price has to reach resistance, support, yellow 1-to-1s, divergence highs and lows. It doesn't matter which one it is, but if price reaches a line, in this case resistance, the only thing that you need to do is ask yourself, where are my triggers? If your triggers are below the area of resistance, it's a termination condition. The market may reverse, there may be an untradeable bounce, there might be 3 hours of indecision, and it's okay to say to yourself, man, I just don't know what's going to happen with the triggers below. Let me sit on my hands and do nothing. Same is true. Price reaches support, it sets off the decision making, and you don't know what the decision is going to be. If your triggers remain above, you've reached a termination condition. Guys, every line that you reach on the market is going to be a termination condition for at least a fraction of a second, because price typically leads the triggers up. And then once it hits, in the moment, you're going to wait for decisions. You're going to learn to pause right at these key areas. You're going to learn to be patient, to wait to see if they're broken or if they're going to break, have the potential to break. And guys, these areas are not broken until both your small and large triggers get beyond them. So if the market is trending down and price reaches resistance and the triggers are above, right here in this moment, you say to yourself, whoa, I have to wait a minute. My path isn't clear. Let's wait for the reaction. Let's let the large crowd do their thing, and we'll see what happens. And sure enough, small and large get below support. Support begins to act as resistance. A lot of you are pinpointing that tail and taking that short trade. Small and large get above resistance. Resistance behaves as support. Guys, the path is clear. And the path remains clear until you reach the next area. Every time price reaches an area, every time price hits resistance, every time price hits support, you have to start that process over. Where are my triggers? What are they telling me? Is it broken? So two options, new users. It's either a term or it's broken. And this is what's going to carry you to your first medium probability trade, guys. And your first medium probability trade will be rule number 2 not met. And if you remember the picture that I showed earlier, the medium probability trade is when only 2 rules are met. Momentum has to be in play, and then you'll also be looking for the entry area, because this particular one says that when your small triggers smash through an area, but your large triggers haven't broken yet. And guys, it's important, you have to understand that the small and large have to get through for it to be broken. So when 50% of your triggers are through, but 50% are not, this is when these areas have the potential to break. This is when that odds favorable momentum can break through key Fibonacci areas. But until the triggers get through, it's only potential. You're going to be focusing on that momentum. You're going to be focusing on low risk entries. This will be your first medium probability look, guys. You're going to find that most of your trades are medium probability trend trades. I'm going to give you a very solid plan to understand when these areas are more likely to break, when that potential is more likely to create the broken area. And it's all going to stem from what we call a strong top or a strong bottom. So before I go to strong top and strong bottom, guys, can you give me a Y in the room? If absolutely no triggers get through the area, it's okay to do nothing. Your advantage of a clear path is gone. When the smalls and large get through, the area is broken. And guys, you're going to have to learn that so that you understand when the potential is there. And once again, if we just go back to the large chart, let's open this up. Price reached a divergence low, almost to the tick, guys. And even with momentum, the triggers remained above, and that was your reversal. Does everybody see it? This is how powerful termination conditions are. Smalls break through, but the large didn't. And this area ultimately stops and reverses the market. There's another one of those divergence lows. It had the potential to break, but it didn't. Resistance to the tick, support almost to the tick, guys. And you're going to be tempted. You're going to want to trade into these areas, especially if it's been a while since you had a trade. But I'm telling you, rule number 2 is the most broken rule from new users. Trading the I hope it breaks rather than it is broken. And it's just one of those times where it's going to keep you safe. It's going to give you advantages, guys. And that rule number 2 is going to set you up either to not give money away or to catch the biggest one. 10K, I'm teaching a class. I'm not looking at Tradeovate. I'm not looking at Apex. I don't even work for them. Go check their website every now and then, I guess, or they'll probably send out an email, turn alerts on. I don't bother with Apex anymore. I don't even look at them. I don't even watch them. I won't give them my money. No, it's okay. It's frustrating. It frustrated me to the point of walking away. So that's just my personal thing. I assumed it was for me since it was in the room. Probably. My bad. So guys, when you get a termination, when price reaches an area, the triggers don't break through. That is your cue to stop, to wait, to pause, to say, man, this might hold the market. If that termination condition reverses the market, meaning that the large triggers, pinch and roll, go from green to red from a high or red to green from a low, we're going to call this a strong top or a strong bottom. And what a strong top or strong bottom means is that the decisions made right at this key Fibonacci area were so impactful that the triggers couldn't break. They were so impactful that it reversed the market. The trades that happen after a strong top or bottom are the highest probability trend trades you can take. It's this look that sets you up for that 50-50 trade with the most success, guys. So you're going to hear strong top or bottom all the time. Was it a strong top? No. Because what happens very often is when you don't have a strong top, when it's not a termination condition that reverses it, very often that market likes to push back up and try to finish the move. Let's see if we can find an example of it. They don't quite reach the fib and it pushes back and then it finishes the move to the fib. And you see this so often, guys. When it's not coming from a termination condition, very often the mid band is likely to hold and continue in the direction of the trend. And it's those termination conditions, it's those strong tops and bottoms that set you up for the higher look. So lines on the large chart, guys. Lines on the large chart can be problematic. We're actually going to use lines on the small chart for entry, but we do have one termination condition that is a small chart termination condition. And this is 3 divergences in the same price range. Divergence means loss of momentum for you guys. That's the easiest way to put it. Divergence, if you see a cyan line, a light blue line print off of a pivot from a low, it means that momentum isn't following price. That's all it is. It's a loss of momentum. But if you see it 3 times in the same price range, in the same area, guys, this can terminate the trend. 3 losses of momentum may terminate the trend, whether it's a low or a high. You're going to see this on a smaller, faster chart. Sometimes when the large chart has a clear path, odds favorable, you come over here to look for your entry, and sure enough, 3 divergences have printed because this is a smaller, faster chart. That is the only time where I'll say rule number 2 isn't met because of a small chart. It becomes more powerful with those anything can happen triggers, the same lesson from rule number 1. And it's more powerful still when it creates a head and shoulders, when that third pivot is higher than the previous from a low or lower than the previous from a high, guys. So lines on the large chart are problematic. Lines on the small chart are going to help get us into trades, but 3 divergences tells me that rule number 2 isn't met. And then I wanted to give this picture. When I talk about odds favorable momentum, that transition period, it's a killer for people. It's easy for people to give away money based on opinions. The same is true for rule number 2, guys. 90% of your day is spent reading indicators, and it's not uncommon on big news days. It's not uncommon on days where maybe crude oil inventories are coming out, or if there's indecision in the world, guys, where you'll see rule number 2 hold, go in both directions. And a lot of experienced users tell me, a lot of experienced traders say, man, if I had a way to avoid consolidation, man, it would save me so much money. And guys, when it can't make it up or down, rule number 2 is going to help you identify consolidation. And when that's coupled with trigger lines that don't mix, there's 2 of your rules not met, and you can sit on your hands and do nothing. Go make a sandwich, play with the dog, and eventually it's going to break out, guys. The market hasn't just flatlined since crude hit 0, however long ago that was, 3 or 4 years ago. So it's okay to sit on your hands and do nothing, guys. It's okay if your rules aren't met to not look for a trade, to really just say to yourself, hey, my advantages aren't present, I have to relax. So rule number 1 is momentum, guys. Momentum is amazing. Momentum pushes the market. Rule number 2 is going to assure you a clear path. It's going to make sure that there's nothing between you and your targets, nothing that could create a bounce, no decision-making areas. Once you have these 2, we're going to go to the small chart, the fast chart, the refinement chart. We're going to let the small crowd do their thing, guys. And your entry area initially is going to be so precise that you're going to use the limit order. You're going to wait for the market to come to you. You're going to use a limit order at areas, fibs, mid bands, yellow 1-to-1s. These areas need to be inside of triggers. Triggers are just moving averages, guys. There's large triggers here, there's large triggers here. Price tends to come back to the triggers. So we're going to let the large crowd, this is your large chart. The large crowd is going to say down, guys. The large crowd is going to say momentum. The large crowd is going to let you know that this has the potential to break. And inside of this 1 bar, you're going to see an entire retracement. And if it's a rules met trade, you're going to see it bounce right off of areas inside of triggers to continue with the momentum. This is your refinement chart, giving an x-ray of the 1 bar. In the triggers, I say triggers 1,000 times when I talk about this. Triggers are moving averages. Triggers are where we expect price to return. On both charts, large chart, small chart. Price tends to break away from triggers and pull back to triggers, and break away from triggers and pull back to triggers. You see it all day long. It does it on the large chart. It does it on the small chart. So in order to be the absolute most precise in entries, in order to have the highest chance of success, the lowest risk, we've taken the large chart, large triggers, and put them on the small chart, on the entry chart. They're called synthetic triggers. Anytime Nexgen pulls something from a time frame and puts it on a different chart, we call it synthetic. So your synthetic triggers are the stepped triggers. Your native 5-1 large triggers are going to be smooth. But guys, when they overlap, one on top of the other, 2 snakes riding piggyback, when they're overlapping, What this means is that your correction point from the large chart and your correction point from the small chart are in the exact same area. You've got one correction point on that chart. Does that make sense, everybody? I say correction 55 million times when I talk about entries, because this is where I expect price to return to. And then we're going to take it one step further and put areas inside of that correction point. And that's what's going to give the market something to bounce off of. So when the large chart says up, when the large chart has odds favorable momentum, when the large chart says that there's absolutely nothing in the way, and let's show you a picture of it. When the large crowd says up with strength and nothing in the way, guys, we're going to let the small crowd fight and give us that shove right back to areas inside of favorable large triggers. So you'll be able to define where the market is most likely to continue. You'll be able to pinpoint right where the small crowd is likely to fail. And there's just a little series of events. The reversal bar printing on the small chart, guys, this is what sets you in motion to pinpoint your entry. Once that reversal bar prints, you're going to do two things. You're going to look for the correction point. Large triggers, synthetic triggers, one on top of each other. That's the red box. This is not your entry. The reversal bar is not your entry. This is the beginning of the fight. The trigger lines are not your entry. This is just where we expect price to return to. You're going to look for fibs, mid-bands, and yellow one-to-ones inside of favorable large triggers. And this is going to create your window of opportunity, guys. The point where the market is most likely to continue. And it may be from the highest point of support inside of favorable large triggers to the lowest point inside. And it might be 5 or 10 ticks. Who knows, right? The tighter the triggers, the less room there is for areas. But you are going to learn to trust this methodology wholeheartedly. You're going to activate a limit order right at the top of that window. And you're going to say, if the small crowd is capable of pushing to this mid-band inside of favorable large triggers, I want to be in this trade, because the large crowd has given me momentum. The large crowd has given me a clear path. The large crowd has said up, and I don't expect the small crowd to get the job done. And guys, this is where you're going to pinpoint your entries. Great entries create manageable trades. This blue fib is outside of the correction point. It's beyond the trigger lines, guys. And once you get through those triggers, there's no telling. The ability of these lines to create a bounce goes down dramatically. This is not part of the equation, guys. Your entry is going to come from inside of favorable large triggers. The reversal bar prints, the fight begins, not your entry. You're going to identify your favorable large triggers. There's your red box. When price hits those triggers, not your entry. You're going to identify the areas inside of favorable large triggers. In this case, guys, it's a mid-band. It's one mid-band, one line. Inside of favorable large triggers, you're going to activate a limit order just below that line, and this becomes your entry for the highest probability trend trade. Every one of these lines beyond the correction point on the other side of those triggers is not in the equation, guys. Those lines are beyond where we expect price to return to. So I'm going to ask real quick, is everybody okay with the idea? Reversal bar begins the fight. Triggers tell us where to look for areas. Areas are where the trade originates, guys. And you've got to go back and you've got to study this a little bit, because once you can pinpoint where the market is most likely to continue, and Rob, this was a lesson from this morning, you understand where the market shouldn't go. And this is where your management begins, guys. Great entries create very manageable trades. Great entries reduce risk. Great entries make it easier that even when it's part of that 20-30% that doesn't work, you're not giving it all away. So your initial stop is going to go where the market should not go, generally 4 or 5 ticks above those trigger lines, below those trigger lines, because once they get through the correction point, we have no idea where it's going to turn. In your Ninja Trader, guys, you've got ATM strategies set up, and those ATM strategies have 12 tick stops set up for you initially. 12 ticks gives you time to react. 12 ticks gives you the ability to get your stop to the right spot. 12 ticks is not your stop. 10 ticks is not your stop. Those are arbitrary numbers that have absolutely no bearing on anything. It is just giving you the time to put your stop in the correct spot. And very often I see people say, well, my stop is 10 ticks. Stops go where the market shouldn't. And the cool thing is that with all the advantages that you have in place, with momentum, with a clear path, with areas inside of triggers to create a bounce, very often you're going to get a reversal bar in the direction of the trend. So this will be your red one going with the trend, going with momentum. You'll be able to reduce your stop a tick or two above that reversal bar. You'll be able to reduce your risk a tick or two below that reversal bar. And once again, you're creating very low risk scenarios because of your precision entering the trades. Sorry, every time I open up the S&P, my NinjaTrader hates it. And I don't know why that's a thing. And guys, it's not uncommon to see Nexgen users pinpointing the perfect entry, getting in at the area inside of favorable large triggers, getting one of those reversal bars, reducing risk super mechanically, and then it's part of that 20%. It's part of those ones that don't work, and you're losing $30 or $40 a contract instead of keeping that $120, $200 per contract risk when it's just unnecessary, when you've already gotten the information. And that's a big part of the chart reading. But you've got to study. You've got to go back and develop trust in the idea that strength pushes a market. And the only way to do that is to go back and study it. You've got to develop trust in the idea that when price has not reached the area yet, that area becomes a target. And then once you have that look, you're not trading a tail, but rather you're looking for a pullback to support inside of favorable large triggers. If you circle a tail historically on the large chart, it should line up with an area inside of favorable large triggers to let you know that you have a rules-based trade. If it doesn't, you didn't have a high probability trend trade. So you're going to circle tails, guys. This becomes your study. And then I've taken a couple pictures just out of the spreadsheet that I gave you earlier in class. Go back and study these pictures, guys. Your large chart will look like this when it's time to take a high probability trend trade. And I want you to see this. 1, 2, 3, 4, 5, 6, 7 bars with no tails. 7 bars where the small chart didn't give you a pullback. And then all of a sudden, there it is. And the first pullback doesn't make it to the areas inside of favorable large triggers. And the second pullback does. And that's the one that carries you off to the promised land. And it looks exactly the same going the other way, guys. Everything is momentum and a clear path. You will be able to pinpoint exactly where the market is most likely to continue, and it's going to make it pretty effortless, and it's going to create a lot of trust, and you're going to feel really confident with what you're doing. And these last two pictures, guys, are pulled straight out of the spreadsheet. Over 350 pictures for you to study. And this goes back to the idea that keep it simple, keep it focused, but you've got to learn the looks so that they become easy. So I always tell people, when you're learning something new, commit to the pictures, right? Commit to the pictures. Crude oil right now, Rob? Odds favorable? Almost a clear path. And it pulled right back to resistance inside of favorable large triggers. And Morgan, if you missed that by a tick, shame on you if this was your look, right? Because the rules say areas inside of favorable large triggers. And man, pardon my French, guys, but you guys get such... Yeah, I'm not even going to do it. You guys get cardiovascularly aroused for mid-bands. Why are you so hell-bent on mid-bands? I spent an entire first hour telling you guys that your entry comes from areas Area. Okay, then you're forgiven. Areas, fibs, mid bands, yellow 1-to-1s, inside of favorable large triggers. And guys, this is what's pretty cool. This is pretty cool. No, not the reversal bar marker, Rob. Is when you enter this trade, your initial stop is about 96. 4 or 5 ticks beyond the triggers. Does that make sense, Rob? And then once you get a reversal bar, 2 ticks above. And then Morgan's got West Coast time frame, right? Sometimes it's advantages, sometimes it's not. So Morgan, so close, right? One of the things with these mid bands, one of these things with mid bands, guys, is they're moving averages and they're moving down. I'll almost always put my stop definitely 2 ticks, if not 3 ticks, because as the market comes up, the mid band comes down, and man, that was so close. And the cool thing is here's a little lesson, kind of a nuance, guys. Even if I get in 3 or 4 ticks below, my risk is minimal because my only area is right at the edge of that correction point. Does that make sense, Morgan? Sometimes it's worth it to me to put an extra tick or 2 on because I know that my risk is minimal anyway. And even if it fails, it doesn't have very far to go to take me out. But if I miss it with that look, it's got all the distance in the world to go to profit targets. And you guys will learn how to manipulate your entries just a little bit. But the cool thing is, golly, where's my charts? Did I crash again? Son of a bitch, I did. I'm struggling this morning with NinjaTrader. It's going to look the same whether it's going up, whether it's going down. And you're going to be able to begin to recognize these trades. You're going to be able to catch them in the moment. You're going to be able to go back, and they will become easy if you just study those looks. So that's the high probability trend trade, guys. Are there any questions about it? And I know that, guys, your first week with me, it's like drinking from a freaking fire hose. It is, it's crazy. It feels like there's so much information coming at you. So I encourage you, to keep it really simple initially. To only focus on if the market is red, it's going up. If the market, or if the background is green, if the golly, I swear I'm not drunk, guys. If the background is green, the market is going up, commit to only going that direction. If the background is red, it's going down, commit to only going that direction. Make sure that you can identify momentum. And it seems silly, right? But Mark, I'm looking for trades. No. Make sure that you can identify momentum. Make sure that you can look at a chart and say without question, yes, I have momentum, or no, I do not. And commit to the rules. Same thing with clear path, same thing with entry area, guys. So I'm going to give you something right now that's going to help you on that journey. And this is Chart Reading 101. I'm going to drop it in the room. I'm actually going to drop a couple things in the room this morning. The first one is Chart Reading 101. And this is, where'd it go? Here we go. Chart Reading 101. This is designed to turn you into a chart reader. This is designed to give you the ability to recognize these advantages at the drop of a hat. This is designed to make it easy to know when the market is telling you it's time to look for a trade. And it all revolves around pictures. I say a lot, take pictures, annotate pictures, tell me what you see, go back and study your pictures with annotations. Guys, I do this because it's crazy. You can't take pictures and annotate them and talk about them and not learn these lessons. So to become a chart reader really fast, take 25 pictures each, guys. Strong triggers, weak triggers, know the difference. Clear path termination, know the difference. 50-50, It's going to set you up for your medium probability. And then just get good at recognizing areas inside of favorable large triggers, exactly what it looks like when you're entering the high probability trend trade. But don't just take the pictures, talk about the whys. Why is it strong triggers? Well, the colors match. There's a separation. Why is it a clear path? Because my trigger's broke. And you're going to take these pictures, guys, and you're going to put them in the 101 section. And I've given you a great start here, guys. You've got 39 pictures of strong triggers. You've got 17 pictures of weak triggers. You've got 16 pictures of a clear path. You've got 32 pictures. And every one of these, guys, that I've put into this chart, when you look at what's being said, smalls below the large, both are wide, space between means odds favorable momentum, strong triggers, Rule 1 met. Does anyone in this room believe that they could look at 50 pictures of this with that description and not have an idea of what it means to have strong triggers? But guys, the flip side of that, this is very simple. This is very focused. This is one thing. The flip side is that if you're looking for everything, if you're looking for all the moves, if you're looking for all the trades, and you're looking at every line and every indicator and everything, guys, you're going to confuse the hell out of yourself. So learn to do this by circling tails with odds favorable and a clear path. And look how it pulls right back to resistance inside of favorable large triggers. And what happens is if you keep it this simple, guys, did I have odds favorable? Absolutely. All the triggers are breaking. The path was clear until I reached the next one. And sure enough, there's that pullback. I didn't enter on the reversal bar. I didn't enter when it hit the triggers, guys. It's the lines inside of the correction point. And once you understand this trade, you're going to start posting pictures in this room that show you making an awful lot of money on the absolute best of the best trade. Very nicely done, Jen. But the more you look for, guys, the more you try to, well, this line is thick and this line is thin and that one is blue, but this one's darker blue. And this is a maybe and this is a kind of, and hey, what does this one mean over here? And what does this number mean when the market's over here? Guys, you're going to go all over the place. So keep it super focused. Let it be simple. Let it be 3 rules, 3 looks, piece them together, create a trade. That's what this is designed to do for you. And if you need a cheat sheet, you know I've got that. I'm going to give you everything that you need, guys. This is the high probability trend trade checklist. This is the rules. Oh, are you Aussie again today? Because England lost. That's awesome. How did Colombia do? Adriana, how did your team do? You guys know I'm rooting for everybody's teams because I'm that guy. I'm like the parent when the kid plays on 2 different teams. Guys, this checklist is designed to get you into the market. This checklist is designed to pinpoint exactly where the market is most likely to continue. This checklist has never been followed to the letter and produced anything less than 70% winners. I don't imagine anyone in this room would be the first if you learn the rules. And as you learn the rules, here's the same checklist when you go to page number 2. What's it mean to have a strong top or bottom? Well, it's a termination that reverses the market. No triggers through. This is exactly what odds favorable looks like, momentum. This is exactly what weak triggers look like. Absolutely no trades, no clear path. Trade away, potential to break. And then there's those windows of opportunities, exactly as I teach them. Reversal bar starts the pullback. Areas inside of favorable large triggers are your window. Limit order goes right here. So I've never had anybody use this checklist do worse than 70%. Use that checklist in the pictures to help you take these pictures to fill up your spreadsheet. And then finally, the KISS plan. I give this away every day. The KISS plan is a stepping stone, guys. The KISS plan is designed to optimize your chances of success with the high probability trend trade. The KISS plan is not the end of the road. The KISS plan has you focused on the idea of strong tops and bottoms. It has you focused on the idea of momentum. It has you focused on the clear path. And it has you insisting on areas inside of favorable large triggers. Guys, the high probability trend trade. Through simulation, study, class feedback, and continuous practice, you're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators, guys. That's a fancy way of saying that when you're a chart reader, you're going to see more opportunities. And I'm going to say it one more time because I think this is really, if nothing else, maybe encouraging for new people. Once you can identify momentum in a clear path, once you're comfortable with these two concepts, once you've posted 10 pictures in the room saying, hey, Mark, this is a termination, this is a clear path, make sure that I'm reading my charts right because I'm working on becoming a chart reader, your entries are going to change, guys. You will create a plan outside of this high probability trend trade. But until you're a chart reader enough to do it, this one keeps you focused on the best of the best, the highest chance of success, the confidence builder. And then once you enter the market, guys, this is your entry. You've got to do something with it. You can't just say, hey, I got in at the right spot, look at all the money. You've got to manage it. So as you're becoming a chart reader, your management should be just as mechanical as your entries, guys. Your management, the way presented in the KISS plan, is nothing but if-then. It's designed to remove emotion. It's designed to create trust. It's designed to pull the fear out of your trading. And then you will create a plan based on your chart reading once you get good at it. So your management plan from the KISS plan is 100% dependent on the large chart rules being met. It's 100% dependent on getting in at the lowest point of resistance or the highest point of support inside of favorable large triggers. And then your initial stop goes 4 to 5 ticks beyond that correction point where the market shouldn't go. And you're either going to get stopped out, which is a normal part of a positive equity curve. It's a normal part of doing it. It's a cost of doing business, guys. Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. But more often than not, you're going to get a reversal bar in the direction of your trade. And if you do, if I don't get stopped out, if I get a reversal bar, then I will reduce my risk 2 ticks above that reversal bar. And guys, I will not touch any part of my freaking computer because I've done all I can do. I'm either going to get stopped out, which is cool, tiny little loss, who cares? With all these advantages, it's going to happen, but it doesn't have to be a full loss. Or it's going to go to my first target. And guys, for the KISS plan, I want to hound on this for a minute. For the KISS plan, your first target is $100 in the distance, guys. With the advantage of momentum, with absolutely nothing in the way, taking the perfect entry, it's hard not to hit $100. Even if the trade's going to fail, it's difficult to not hit $100. $100 breeds confidence, guys. $100 establishes that trust in the areas inside of favorable large triggers. $100 puts money in your account, and you're going to move your stop to break even. And guys, this is where I tell you, you will create a plan outside of this one. But moving your stop break even, what it does for you is your brain says, whoa, Paul W., whoa, Griffin, you just got paid and you have absolutely nothing to lose. Let's hold on for that second target because the large chart has odds favorable momentum. Because the large chart has nothing in the way, let's have nothing to lose, money in the bank, and hold for the second target, guys. And if it hits that second target, it's only $200 away from your entry, which means that you're done at $300, guys. At $300, you're exiting that trade. And no matter what happens next, it doesn't matter. You have $300 and nobody can take that from you. But you will craft a plan tailored to your personal goals based on your experience reading the indicators. And guys, even if you come to the management side in the client trades, there's things that say hold on for bigger moves. And when you see that, it's going to be revolving around the idea that when I have odds favorable momentum, when I have a clear path, when I've already been paid on the first contracts, this is when it's okay to turn that $300 trade into $1,000 trade, a $700 trade. But I want you guys to see something. Users are notorious for trying to catch all the money. Let me drop the KISS plan in the room as well. Feeling like it has to be a $1,000 trade to be worth their time. Feeling like it has to be a $300, $400 trade, or they're not even going to take it, guys. If all you make is $100 a day, that's an extra 25 grand in your account every year. And if all you make is 200, that's $50,000, guys. Based on 2 failed trend trades a day at break even. $500, $250 a contract is a very reasonable goal. That's $126,000 a year. Making $1,000 a day when you're comfortable, give yourself a few months, become a chart reader, guys. That's $250,000. But here's the thing, thanks to modern technology, there's trade copiers, multipliers that'll let you take that $100 trade and apply it through mirroring on 10 accounts, 20 accounts. So you can make $100 a day and turn it into $1,000, $2,000 a day from that same low risk, high probability trade, guys. The idea isn't to make all the money. The idea is to enter the market when you have a statistical advantage, to manage it like your only goal is to get paid. And guys, there's ways to do it that are so conservative, that are so focused on advantages, that if you just adhere to the idea that your only option each and every day is to follow your rules, you'll be amazed at the results, because it's the process that yields the results, guys. It's not your desire for money. It's not your hope that an area breaks. It's not wishing that weak triggers will carry you. It's simply saying to yourself that momentum, a clear path, and an entry area is a recipe that has been proven to win 70 to 80% of the time. And if all I do is stick to trades with statistical advantages, I'm going to end up winning if I learn how to manage them, right? My chance of success goes up. So, guys, that's my first hour every day. I'm going to give you guys this in the room, because the second hour, the third hour, is nothing but looking at your charts. That's all it is. It's just looking at your charts and saying, hey, let's talk about momentum. Let's talk about a clear path. But do me a favor. Tell me what you saw. Tell me about your momentum. Tell me about your clear path. And guys, we're not doing this because I want you to work hard. We're not doing this because I'm like, oh, you know, I had to do this, so they have to do it. Every time you annotate a chart and you tell me what you see, if there's a challenge, whether it's maybe on momentum or a clear path, or maybe your entry's early or late, maybe your exit doesn't make sense, guys, every time you post in this room, it's a private session with me. It's like you and I, one-on-one, looking at what you did, talking about your advantages, and me saying, hey, you know what? I think we could have done this a little better. Look at this, look at this, look at this. We could have reduced your risk. Hey, look at this, look at this, look at this. We could have gotten a little more out of this trade. You didn't have to jump ship early. And for example, when Morgan posted in the room and he said, man, it missed me by a tick, Mark. Well, then that opens the door for the conversation about how close he was to the edge of the correction point, how small his window of opportunity, and how maybe risking an extra tick, it's worth it to not trip over a couple pennies trying to save a few dollars. And suddenly Morgan never misses this trade with all that momentum and a clear path, and it becomes easier for him to capitalize. And guys, that's what we do. So make sure you're being thorough on your annotations. Don't make me guess, because if I have to guess, I'm just going to go back to 3 advantages and ask you what the hell you were thinking, right? So I'm going to take 5 minutes, guys. I'm going to go relax. Feel free to watch crude oil while I do it. It looks like a 50-50. Smalls are through, large are not. Divergence prints. The correction points aren't one on top of the other. Man, it's not even from a termination that reversed the market. Did I bring up the KISS plan for you? Let's do this before I go. Right now, Ron's laughing at me because I said I'm going to leave and I'm not, because I do this every day. Guys, your initial KISS plan is the high probability trend trade. It's the best of the best. The second page on your KISS plan is that 50-50 trade. It's that medium probability trade. It's that not high probability trade. This is how you're going to take it with the best chance of success, is it has to come from a strong top or bottom. So if you didn't bother to learn that lesson, you're going to struggle with the 50-50. It revolves around odds favorable momentum. If you didn't take that lesson from the high probability trend trade, you're going to struggle with the 50-50. You can't have divergence on the small chart to have the best chance of success on a 50-50. So if you didn't learn to recognize divergence from the high probability trend trade, you may struggle. Same thing with entries, guys. And this one reminds you, divergence, no trade. And then when you get to management, it's going to be different because it's a different trade. And it reminds you, divergence, no trade. 3 times in the KISS plan does it say divergence kills a 50-50. That's on the one that I gave you in the room, guys. I'll drop it one more time. So while the 50-50 set up an awful lot, there are very definite things that kill a 50-50. Bad bottoms, divergences, split triggers. There's so many things going wrong with this trade, and it might go up, but it's not a look that wins more often than it loses. Guys, you have 1, 2, 3 areas that aren't broken, and it is a $170 range that you're expecting the market to push through without momentum, with divergence. So once you start talking yourself in advantages, these trades are easier to avoid, and you're never going to miss this trade. So I'll be back in 5, guys. Go stretch your legs. When I come back, post them if you got them. All right, guys, let's get back to work. I'm going to scroll up to the very top, just so you newer folks know. I scroll up to the top of the chat box. Whoops. So I kind of go back and forth. I can't see your questions for a moment. Guys, if I ever miss a post, if I ever miss a question, make sure that you tell me, without a doubt. Just tell me, go, hey, Mark, guess what? You missed one. Can we talk about it? So we're going to start this morning. Andy got us going in the middle of the night. And this was from Friday, and he said, hey, Mark, check it out. It's one of those 50-50s with the perfect entry. I don't think you would have been stopped out. And off it goes. And then Paul posts in the room, and Paul says, Mark, check it out. We got odds favorable, the potential to break, pulls right to resistance inside of favorable large triggers. But I just opened up, so I didn't take it, but I recognized it as such a beautiful trade that I wanted to make sure I came in and annotated it. Great job, Paul. Guys, sometimes the smarts come not from the trades you take, but just the annotations. And then Andy, I posted in the room, I don't think he's here, he's working today. Strong trending market, that's the look. And guys, it's by the mid-band. Great entries create manageable trades. Andy made 6 ticks. 6 ticks. When if he had gotten in at the correct spot, it becomes 16. Great entries create manageable trades, ladies and gentlemen. I can't stress that enough. They lower the risk. They increase the profit potential. And guys, there's a time to take confirmation and there's a time to not take confirmation. And that's what we're going to talk about right now. One of the things, Andy says bought confirmation, meaning that Andy waited for a reversal bar to take this trade. Andy had odds favorable momentum. He had the potential to break. He had the strongest triggers. He had absolutely no divergence. And he had a tiny little window of opportunity to take this trade from. Guys, there's a time for confirmation. Confirmation is when there's a challenge, right? Maybe your triggers are split. Maybe there's divergence on a 50-50. There's a time to wait for a reversal bar. And guys, there's a time to get in at the freaking area and accept the consequences if it doesn't work. You have to have a willingness to lose. You have to have a willingness to not win every trade. You're not going to win every trade, guys. And the more you start believing that giving up 15 ticks because it confirms the movement, what if it drops from the 16th tick, guys? Your risk is huge. Learn to trust the entries, guys. Learn to believe in the idea that this methodology has been taught and proven. Go test it, develop trust in it, and take those great entries, because that's how you're going to find that success, guys. Rob says, check it out, Mark. Small's above the large are coming up. I'm looking for a pullback on the 5-1. You better believe you are, Rob, because that's what the rules say to do. And Rob, in a little late, right? The entry would have been at the mid-band. And Rob, your second stop is right at those synthetic triggers, right at the second correction point. Do you see it? I want to make sure that you see this. And I think this is what you were talking about. You left it at 11 ticks. You needed to be 4 ticks below that lowest line of the triggers, and that probably would have kept you in the trade. And I know that management's the second thing, and I know that you're working on it, Rob. But there's a good lesson about why we use that correction point. And then another one, great top, odds favorable, and then there was a momentum style entry right there, that snap back because of the good top. That's that 2004 trade, Rob. Great recognition. Nicely done, dude. You're really slowing down and putting it together. And then Andy, fiddlesticks, had to go spoil a good day. Bad entry, bad management, third divergence. You just don't have to be in every move, ladies and gentlemen. There's easy moves. Can everybody hear me okay? Guys, there's moves that are easy. There's moves that are so chock full of advantages you can't wait to get in, and you will absolutely insist on them having to come get you if they're going to stop you out. And the further you deviate from that, when you start jumping in on the wrong side of triggers against momentum, not from areas, right? When you don't have the best trigger looks, when the area is not broken, you just kind of go, damn it, right? It's difficult and it goes against you quickly. But when everything is right, it's easy. Jonathan said, wanted to enter here. Odds favorable, momentum. Triggers good. Divergence kept you out for the time being. Then smalls moved to outside of price, so not the best momentum. No pullback a week ago. You would have just jumped in. That's true. And Jonathan, I'm not sure if you're in here. I think you had a doctor's appointment. After the termination, when the small triggers roll, that's your first shot at the short. Right there at the mid-band, right inside of the large triggers, and it doesn't look like it gave another opportunity. But good recognition. You're respecting the termination conditions, and you're just waiting to get in. So sometimes it takes a little level of patience. And guys, what you'll find is that the trades that you don't take today might be the trades that you take tomorrow. Because you're going to grow, you're going to get better, you're going to see more things, right? And that was Morgan's stupid mid-band. And then Jen came in, termination condition, odds favorable, everything breaking. Notice that she's annotating, right? Area inside of favorable large triggers. I think this is probably the most important thing that you can write on a chart. If you're learning entries, is if every time you take an entry for a high probability trend trade, you use the phrase written on your chart, area inside of favorable large triggers. And what it does is it keeps you focused on that advantage, the advantage of the correction point, the advantage of the bounce area. And she says, with all this momentum, I know where that thing's going. Let me get out down here. It doesn't have to be difficult. Just be consistent. And then Paul W. says, that's the same one you posted earlier today, Paul. I'm not sure if you meant to double post that one or if you had something else to show. And then Jen, strong bottom, odds favorable, no divergence, area in between the correction points. And since the triggers were split, you said you had a tight stop and you got out at trouble, the area that hadn't broken yet. Quick profits with all that momentum. Nice trade. Steve Diego. I love this. Steve's showing off. Strong top, odds favorable, and he has room before he gets to trouble. So Steve says, with all this momentum, JTFI, baby. Tooth, some days are worse than others. Did you go through, and we'll come back to yours, Steve. Oops, I need the software trading guide. Tooth Plumber, one of the things that you can do, this is the Ninja Trader 8 best practices. A lot of times when it crashes, there may be something corrupt in there. Go through and do the clean out. Make sure everything is good. And the clean out really starts right here. Cache tick, stuff like that. Deleting all the temp files. That's what I do when things don't go well for me. I hope that's helpful. And I want to get back to all the greatness that Steve had here. Yeah, I do too. And guys, I want you to look at the language on his chart. Strong top, strong top. He's creating confidence in what he's doing. Strong triggers, separation, right? Cleared trouble. And he gets out And I'm not sure why you exited there, because that's probably another entry. But I love this. He says, look at all this momentum. Let me get paid, right? $200. Boom, boom. I love it. $300. And then, guys, when momentum dies, very often it turns into a high probability trend trade. And you missed it because you were annotating. Oh, that's frustrating. But this is one of the things, guys, when you're jumping into the market, and that's all this is. It's a jump in trade. This is, hey, I have momentum everywhere. I'm just going to jump in. And I'm not against this trade. But very often I see people holding for giant moves that don't exist. I see people using momentum to enter but not exiting with a loss of momentum. So Steve Diego, rock star, you did it perfect. Everything is still full of momentum, and you don't just hold forever and then eventually the momentum dies, but it turns into the most beautiful trend trade, and down it goes. So great trading, man. I'm sorry you missed that one, because I know that that's in your plan and one that you would have caught. And then Zorro, same thing. Odds favorable momentum. He's below the fibs and not to the mid band. And quick profits, momentum, both charts. When I told you guys, momentum for the win. Momentum is the basis for so many solid trading plans. You're witnessing it right now. Both Zorro and Steve Diego did it perfectly. You'll see Ron C in here do it wonderfully. But you've got to learn a few things. You've got to be able to identify momentum. You've got to understand when areas have the potential to break. But most importantly, guys, you have to have rules to take it. You have to have a reason to get into the market. You have to have a reason to exit your trade. And you have to know what kind of trades you're taking so you know how you're going to manage it. So let's take a look at this, guys. Did anybody try to take this one? Small's below the large, but the large are kind of flat. And then no areas inside of this correction point. No areas inside of this correction point, right? There's a mid-band hovering in the middle. And guys, it just kept going. Once it gets past that correction point, who knows where it's going to stop? And now it's going directly into resistance, and all the triggers are below. So if you were thinking about taking this long with the smalls not above the large directly into a termination condition, it doesn't appear to be working for you in the moment. Does that make sense, everybody? All we're doing is looking for advantages. So let me take a picture of this. I want you to see something pretty cool. So newer users, guys working on things. Is this odds favorable momentum? The small triggers are inside of the large triggers. They're not above. The scissors aren't open. Do I have odds favorable momentum? What do you think, guys? Who are my newer folks? I'm looking. Andrew Z says no. I agree, Andrew Z. Because I know without a doubt that this is odds favorable momentum, right? I've got to study that. I've got to know the difference. What about the clear path? How do we feel about it? Price reached resistance and absolutely no triggers broke. Did we have a clear path to the upside trading with the trend? And guys, just for the record, I know this stuff. If you're learning it, it's not a bad idea to play along. And guys, this is where new users get in trouble. But Mark, there was an area inside of triggers. Yeah, there was. The small chart looked beautiful, didn't it? But it goes back to this picture. If all you have is an area inside of favorable large triggers, why on earth would you give up 60% of your advantages, 66% of your advantages? The likelihood of success goes down dramatically. No big mo. Amen, Pete. Does that make sense, guys? Because this is a beautiful example. This is a beautiful example of how rules keep you from just giving away money. And guys, I'm going to tell you right now, the biggest difference between successful traders and traders that have challenges are the people that can adhere to rules and don't give away money when the rules aren't met, and the people that just wait for advantages. I think this was the one Jen took. Does everybody see the momentum? Everything is screaming up. And sure enough, it does pull right back to support. It's a big risk, but it does bounce, right? Momentum, Big Mo, as Pete calls it. I love that. Big Mo, momentum for the win, guys. That's all the pictures we have. So let's do this. Dun, dun, dun. Let's take the cheat off. And let's make it pretty pronounced, guys. Does everybody see odds favorable momentum? Large chart leads the way. The large chart is red. The large chart says down. The large chart, small triggers are below the large triggers. They're wide. They're angled in the direction of the trend. The scissors are open. Rule number 1 is met, guys. Large triggers are breaking through the area. This one is like right in the middle of the break. And the small chart is screaming down. And everybody's worried. It's going without me. How am I going to get paid? This sucks. It's never going to pull back. And then all of a sudden, you get a reversal bar. And at the time of the reversal bar, you're like, what did Mark say? He said, draw a box from the bottom of the triggers to the top of the triggers. That's a huge range, isn't it? Does everyone see that? And notice that your reversal bar is inside of the triggers, so the triggers can't be your entry, right? That happens sometimes. And then you said, but he said, form a window from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. How cool is that, guys? That's your window of opportunity. A lot of you put a limit order just below it, and it hit it, and that mid band is the top of the window, and it was about 2 ticks below it, and then there's your reversal bar, guys. And I want you to see something. If you were in at 85, right there just below, your new stop, let's see, 88, 89, 91 is right here. That's all the risk that you had on this trade. This is what I want you guys to get. This is what I want you guys to learn. You guys need to learn this entry, because once you learn this entry, life's pretty easy, guys. Things happen. It's low stress. It's low risk. It's high probability. This is the best of the best. And guys, if you got in at 85, you had $100 at 75. You had $300 in your bank account at 65. You shut it down, go surfing, right? Shut it down, go play golf. Shut it down, go walk the dog. Take your $300 every day. Get one of those trade copiers, put it across 10. Make it $3,000, right? But guys, it's getting the best of the best that yields results. It's the process, it's the advantages. Has nothing to do with your desire to win. Middle of the night. We're all sleeping, right? So, great question, Morgan. And I'll show you exactly what it is. That one didn't quite come to be. So, let me show you. Let me pull up just something that I can write on, because for me, anytime numbers come into play, I have to have something to write on. So, if I take a trade, Morgan, right, and I get into the market, and I've got $120 per contract risk, and let's say it's a 2-lot. I'm risking $240 on this one trade. Does that make sense? If I'm on a 10-lot, I'm risking $1,200 on this trade. My risk having 10 contracts in the same one is $1,200 right there. What happens And let's just say that this is one of those prop firms, and I've got a $50,000 account, and I can only lose $2,500. A 10 lot Morgan, I would be way over leveraged. And this is how you lose accounts fast if you're in those prop firms with trailing drawdowns. But here's the deal. If I have 10 $50,000 accounts, and guys, I'm not encouraging you to go get 10 $50,000 accounts. I would make profits on one account and let the profits pay for the second and the third and the fourth. But what happens is that $120 per contract is spread out over 10. So what happens if that trade loses, you lose $240 in each account, and then your trailing drawdown is intact rather than losing that $1,200 and blowing out your accounts after 2 lost trades. Does that make sense? So that's what those trade copiers do for you. You can spread out and not over leverage accounts with those. But here's the deal, and this is where people struggle, right? If I have a $50,000 account and I'm in a prop firm, I have to make $3,000, right, before that's ever qualified. Why not make $6,000 and then add an account, right? And then when I'm up another 2,000 or 3,000, no, it's not the NT servers. Andy, if it was, then everybody would have a problem, right? If it was the Nexgen servers, everybody would have the problem. A lot of the problems that come on NinjaTrader, guys, are different things. Tradeabate's down for sure. But data is all digital. And guys, sometimes things corrupt, and sometimes you get bad data, and sometimes you get challenges. And if you go through that process that I posted in the room of cleaning out every day, getting rid of the old ticks, right? Starting fresh, stuff like that, it helps NinjaTrader work its way through life. And this is one of the challenges, guys. NinjaTrader is like 99% awesome. But there's one little challenge where it crashes. And that's one of the reasons why my brother's creating the browser version. Termination conditions for the win, guys. Pretty cool, right? So Morgan, it used to be let's trade a 2 lot and let the profits take us to a 3 lot, let the profits take us to a 4 lot. And you'd have that higher risk, right? There's people that trade 6, 7, 10, 12 lots, but there's also people that trade these prop firms, and they remain not being over leveraged by spreading out the risk across accounts. I hope that made sense. One of the things that happened though, when people really started, all right, Andy. And I think, copiers have been a thing for a while, and these prop firms started going through and stuff like that. And guys, I've had students fund $200,000, $300,000 accounts, right, to try to pass, and put $2,000 out there instantly to try and pass, guys. If you can't pass on one account, why blow out the other 19? Just saying, throwing that out there. It's up to you. You guys will make your own decisions. Pete, I think that for some of the Apex stuff, you have to use Rhythmic. Morgan, let it pay for the next one, right? Just let it pay for the next one. Guys, we've got an awesome termination. It's beginning to reverse the market. We're just waiting for these small triggers to roll where everything comes through. So I've had too many accounts, Pete, reverse positions and do stuff and wake up with $1,000 missing. I won't use it anymore. I just run off of my live account now. Guys, that's it for all the pictures. That's it for all the pictures. Me too. I'm going to be so busy once that comes through. I'll try and open gold, guys. We'll take a look at it. Hopefully everything remains stable. I'm excited about the Nexgen prop firm, Morgan. Not because I'm part of Nexgen, because I've been watching my brother put this thing together, and I've never seen anybody, you know, usually I did, Paul, it was the same trade that you posted this morning. And he's creating a trade copy or two, Morgan. Paul, if you want to repost the one that you wanted to post, the one that you posted was the exact same trade that you posted this morning. And I think that maybe it was stuck on your clipboard. I don't think it was the one that you meant to post, because we talked about this one already. That's the one you didn't take the trade, you just opened up. Yeah. Guys, I'm watching my brother build this prop firm, and I'm watching him do all of his research and due diligence. And one of the things that he's done and that we've done on the sidelines is we've gone through and we've asked Nexgen users, and we're looking at reviews, and we're talking about all these things, and what are the things that bug the ever-loving shit out of you guys with prop firms, right? Whether it's customer service, you guys know Nexgen's going to have great customer service. It's what we've always done for 27 years. Whether or not, you know, trailing drawdowns versus end-of-day drawdowns, that's a big complaint with a lot of people, and Nexgen's going to offer both. And there's going to be a lot of things that are coming through, and we've got all these programmers working so hard to eliminate all the challenges that people are getting. And guys, I'm excited about it. I'm so excited about it. And the thing that got me excited, because I am the hippie education guy, is that we want you to win. You know, everyone's going to make mistakes because we're all human. But the goal is to be able to give you the live education, to have you with the software, to put you in a position where you can be profitable. Because if you're profitable, guys, we're profitable. If you're doing well, we're doing well. And it's a beautiful thing. And then one of the things, and I don't know that this is going to come to fruition, is that like after 12 weeks or something, or after your 12th payout, John's like, you know what, after their 12th payout, they just get to keep 100%. So, man, it's a lot of great stuff going on. Hey, Tattoo Timmy, I see you sneaking in here. You're late. Everybody say hello to Tattoo Timmy. He was my mentor. It's working now, Andy? Awesome. Good stuff. My whole left sleeve is done by Tattoo Timmy. So guys, here's crude oil. Let's talk about it. Bad top, right? Yes, ma'am. Pulls all the way back to support, all the way back to the mid-band, and the large triggers remain a full bar away. Gap theory. And then remember, when the market doesn't make it to a key area, it loves to finish the move. And we're into a termination condition here right now. So it's maybe not the best yet. But that's pretty cool, right? And yeah. And so, Pete, do you use the 21 like that too? On one of these? Is that money for you? Wait for the confirmation. Does that fit into the Pete bounce? Oh, but the look, even if it weren't gold, the patterns repeat themselves everywhere, right? Is Ollie in here? Because he's been working on this trade too. So patterns will open up, guys. They'll give you different things. So small's above the large are wide. The area has the potential to break. There's one line. One line inside of triggers. Does everybody see it? Momentum, no areas reached. One line inside of triggers. One. Kind of cool, right? I don't trade gold either, though, because gold likes to do this wonky stuff, and it throws me off. But let's do it anyway. What do you say? Let's have fun. It's simulator. There's lessons to be learned. Paul, perfect. Absolutely beautiful. Odds favorable, clear path, perfect entry, easy money. Absolutely beautiful, Paul W. I don't know if it's going to get to me or not, but does everyone understand why my entry is 2 ticks above a mid-band? Why my entry is inside of triggers? Why my entry is there in the first place because of the advantages here? This is the things that you've got to put together, guys. I don't even need this chart until this chart says go. Termination reverses the market. Odds favorable, momentum haven't reached an area. This is everything that I look for. And because the rules are met on the large chart, I open up my small chart. And my whole job is to find a line inside of triggers. And that's it. I mean, there's nothing else for me to do. It either hits it or it doesn't. Termination. Market's starting to roll. Right? Small triggers aren't below the large triggers. Let's see if we end up with a clear path and an area inside of favorable large triggers. Maybe there's one of those medium probability trades. But with strong triggers, or with a strong top, guys, it changes things. That creates advantages. Man, they didn't come get us, did they? Is this over? Or do I just need to push that up a little bit? Do I still have odds favorable? I do. Now I've got a complete clear path, and I've still got one line inside of favorable large triggers. Guys, is this high probability or medium probability? It's high probability. My rules say that I absolutely positively have to have that limit order there because my rules are met. And the only thing I can do is follow my rules. That being said, this is gold. And I don't necessarily trust gold that much. Gold tends to be a little temperamental. But because my rules are met, I'm going to take that entry. It's going to tap it 3 times and not give me the entry. I refuse to chase it. I will not chase the trade. Isn't that a bummer? Morgan, this is payback for what they did to you earlier. They just did it to me. Let's see if they come get it, though. A lot of times, people forget that the small chart is full of fluctuations, that the small chart is this tiny little battle. And you'll watch that market go up, down, up, down, up, down. Drive you nuts. Hey, what's going on, Bobby? I haven't seen your smiling face in here in a while. That's when you don't chase, right? Because if I jump in up here and then it does what it's supposed to do, well, then I've just increased my risk, right? So we watched it bounce off of my order 3 times, and it didn't fill me. And that's a bummer. But I'm not in control of that. Maybe they'll come back for me. Oh, they're so close. Should we go 2 ticks above just in case? Nope, that was it, guys. Missed it by a tick. Maybe they'll come back for me. I don't know. I do have odds favorable. I do have a clear path. But guys, this is day trading. I'm not in control of anything. The only thing that I can control is whether or not my rules are met, whether or not I have odds favorable momentum, whether or not my path is clear, and whether or not there's a place to create a bounce inside of favorable large triggers. But that right there is a pretty good example of why we say a couple ticks above the area. We'll see. Maybe they'll come back for us. Maybe they won't. but I don't have any other pictures to click on. What do you guys want to talk about? We have a full hour. And nobody's saying much. And I don't have a tea time today, so. Man, that's just... This is where people go, oh, they missed me.
Order.
I'll just jump in here. And as long as price doesn't close below these triggers, we may have a fighting chance. How to go over high momentum on small.
Order, Bill.
Look at that. Momentum for the win, right? Pretty cool. When you say how to identify high momentum on the small, it's the same as the large. Watch this, D. You're going to like this. This is, whoops. Let me show you how easy it can be. So I'm going to show you something. Can you tell whether this is a large chart, small chart? It's separation between the smalls and large. That's high momentum. That's the best of the best. On your small chart, it's the exact same thing. Whoop, sorry, I scrolled way too back. When the small triggers get outside of the large triggers, it's high momentum. That's it. But there's this thing, guys, there's this thing called the momentum phase. And I think that's what you're talking about, D. And I just said it. When I just kind of jumped in and I said as long as price doesn't close below those small triggers, it's going to keep going up, guys. As long as price doesn't close below those small triggers, you're in the momentum phase. That market's going to keep going up. And then D, once you get a close on the wrong side, if you were relying on momentum, this is gold. That's your loss of momentum. Close on the wrong side. So it's the idea of the momentum phase. We'll see if we can find it on another. That's gold. That was a small chart on gold. As long as price is left of these triggers, you're in the momentum phase. Once it goes to the right, that momentum phase is over, and you have to expect retracements. Does that make sense? As long as price is left of those triggers, you're in the momentum phase. Once it comes to the right side, you have to expect a pullback. That's why we wait for the reversal bar to look for the highest probability trend trade. But you guys that like to just jump into the market, and I'm cool, right? If you're a jumper, be a jumper. But if you jump in with a clear path, if you jump in with momentum, once you get to the wrong side of those triggers, your momentum phase is over, guys. And you have to expect that the market may come back and turn into a trend trade. Does everybody see how we didn't have odds favorable momentum? Looked like a beautiful entry, didn't it? Momentum wasn't there. The path wasn't clear. Can you give me a Y if you see that? Crude oil is showing us patience today. Crude oil is showing us what it looks like when there's not trades to take, guys. And it's so easy to get sucked in to the area inside of favorable large triggers and say, you know what, I'm going to take this trade and completely ignore that the large chart doesn't give you anything. Look at gold. That was it. Clara, it depends. It depends on my management plan, really. So there's so many different ways to look at it. In the KISS plan, let's go through a couple different options. So in the KISS plan, if we had gotten our fill at 28.6, right? If I would have been smart enough to put it at 7, then $100 would have been right here. And according to the KISS plan, that's your first target. So you're $100 in the bank. 07, whoops, is your $200. And that's about right here. So if you're trading the KISS plan, Clara, that's it. You're out of the market right here, and none of this is your money. Does that make sense? That's the KISS plan. With this look on the large chart, coming from a strong bottom, everything up, my first exit, I'll take half my contracts off at this divergence high. This is the best of the best, Clara. This is the greatest trade I could ever take. The highest probability, the lowest risk. So for me, with this look on the large chart, I'll take one off here. So it's only 3 ticks more. So I'm making about 130 on my first one. And then honestly, my second one, I'm going to do one of two things. I'm either going to let it close on the wrong side, and I'm willing to get out right here at 32 because honestly, that's a huge trade. That's a huge trade. Or you're just saying, you know what? Everything says up. Let me hold for a fib. And then it hits the fib. And Pete says on a reversal bar I'm in, but that's going to be pretty short-lived, I think, Pete. Does that make sense, Clara? So one of the things that I stress every day, is, guys, in the beginning, let it be super easy. Let it be very basic. Let it be nothing more than if-then, right? Take the perfect entry. It says spoiler. I can't wait to see that. And keep it very mechanical. And then you're going to create a plan, Clara, because you're going to see the same thing so many times. You're going to be like, oh my gosh, this is when I can hold for bigger moves. So great question. Management is all up to you, guys, and everybody manages differently. There's some people that love home runs and they'll sit through trouble. I don't care for it personally. I'm not a fan of sitting through trouble. I'm not a fan of hoping areas break. I just like to get in at the right spot and get out of trouble. So 10K, you took this one. Everything went in your favor. Didn't hit the fib. You took 9 ticks, went 2 ticks below. The reversal bar against me at divergence potential, spooked and walked away at second bar. So now look what you missed. So 10K, this is why super mechanical is cool, right? Your entry is perfect and you didn't hit the area and you've got the best momentum ever. Even on sim, it's scary. And guys, thank you for putting that 10K. Guys, if you get the shit scared out of you on sim, if you're not willing to keep risk on a trade in sim, you're never going to be able to do it live. So you've got to practice management on sim. And I don't know what your management plan is, 10K, but let's do this. Let's apply the KISS management plan to it. While you're still finding yourself a little apprehensive, right? So $100, this is the S&P. You're in it 92.75. You only have to make it to 94.75. No, 96.75 for 100. Is that right? For 12.50, 25. Yeah. So there's your first target, just below that divergence high. And then your break even. And your second target is, God, I suck at math. So 2 ticks below the reversal bar and then wait for the next bar. That's it. So what changed? After your entry, check it out, 10K. The only thing that changed is the small triggers quit turning against you. They actually went in favor of the market. And everything here is still set up. And your second target was 57.05 and it went right to it, didn't it? But you've got to do this. And 10K, you've got to take these trades, right? And you've got to make a mistake. Because what you just did is the greatest thing ever, is you taught yourself that you got to learn to trust your targets. You taught yourself that the large chart leads the way. And you're pretty much telling yourself, I need a management plan that doesn't revolve around fear. And it's okay. and it's okay to do this. And I'm telling you right now, if you don't do this, if you don't post it, if we don't talk about it, you're going to hear it and you're going to see it and you're living it and this is great, right? And gosh, what is it? What's $100? It's 8 ticks to $100. So 94, 8, 4 gets me to 375. So it's 94.75 is your $100 right here. 96.75 is your $300 trade, 10K. Before you ever get there, right? Before you ever even get to trouble, it's $300. It is okay, because 10K, we all work through things. It's okay. If you have fear, you don't trust it. It's okay. If you have fear, then you don't have a solid plan. You don't believe the plan. And this is for everybody. This isn't just 10K. Guys, this is why simulator is such a big deal. This is why taking 1,000 pictures is a big deal. Let's do this real quick from the spreadsheet, because we're just killing time, right? This is a high probability trend trade long, according to what it says on the spreadsheet. This looks just like yours, 10K. Odds favorable, didn't reach the area, perfect entry, $300 was done, easy, right? So does everybody see this? Rules met, entry, target reached, right? I'm going to go to the one right below it. Rules met, perfect entry, target reached. Let's do another one. The other direction. Oh, New took his off of there. Hold on. Rules met, perfect entry, target reached. So what do you guys think? If you saw 300 pictures like this, 10K, do you think you'd be more inclined to hold? Maybe, maybe not. I don't know. But here's the deal, is instead of going back and looking at 300 pictures of it working, human nature says, Mark, the only way you're going to learn, the only way you're ever going to get better at this is if you take all of your fear and anxiety and try to trade the market. Try to catch every move. Try to be in, try to be out, and try to manage it with no plan. But I'm telling you right now, guys, 2 will be losing a little or a jackpot. You're just developing trust. And then look at this. Perfect trend trade long didn't work. Why did I put this in there? Odds favorable, clear path, run over. Why on earth would I put this? Exactly. Second contract 10K can be break even or all of it, right? You have zero risk, and you've got to learn to embrace that. Guys, I put this in the spreadsheet for a reason. Does everybody see odds favorable? And everybody sees a clear path, right? And everybody sees the perfect pullback to an area inside of favorable large triggers. And this was perfect, and this is a trade that wins 70 to 80% of the time. So how many times out of 10 does it have to lose? Guys, this is such a pretty look. I don't mind putting a loser. I don't mind putting a loser in the room. Because that's the one, 2 to 3 times every time. How long does it take to develop that trust? Nothing has ever been their fault, Morgan, in the history. So guys, if you're struggling with holding trades, if you're struggling with trusting entries, if you're struggling with recognition of advantages, come to this spreadsheet and start clicking on things. because that was odds favorable in a clear path, and I'll be damned, it went right to a mid band and straight to the target. All right, guys, and if you had the microphone right now, what do you suppose would have been a better exit for that last contract with weak triggers at a fib? Does it make sense to give away $100 when you know exactly where the market's likely to go? Does it make sense to give back $100 when weak triggers hit a fib? Guys, this is the other part that you're going to have to do. Your management's going to have reasons, guys. You have to know what you're getting into to do it. Steve Diego missed a good setup. That's it. Why not get out at areas, right, 10K? Steve says from a bad top, when it hits the termination, and guys, on NASDAQ, this is very much a termination, all the triggers roll and the path is clear. And then with divergence, he waits for the confirmation bar. Happens to be from an area inside of triggers. NASDAQ's a different animal, but Steve Diego, you're absolutely right. That's as sexy as it gets. And as long as I'm left to those triggers, it's nothing but money. Nice setup. Guys, it's not a high probability trend trade. This is what happens when you learn how to read your indicators. And 10K, you're absolutely right. There was some hope there. And guys, look at that. Odds favorable, clear path, there's a tail. Momentum, clear path, there's a tail. And it went right to Fibonacci resistance. 50-50, there's a tail. Right there at support. So we're just learning patterns, guys. And I'm going to pull this up because I think this is one of my favorite phrases. Oops, I just opened my trading view. That's okay. And this is from Mark Douglas. Mark Douglas is an amazing part of trading psychology. He's no longer with us, unfortunately. But he and my brother spoke an awful lot in the early 90s. And he says, and I believe wholeheartedly, that when you stop expecting to win every trade, you'll start winning most of your trades, guys. When you don't care about the result, but rather the execution of the method, that's when it becomes a game changer. And when you believe you know what's going to happen, and 10K, maybe you believed that down bar was going to take you out, right? When you believe you know what's going to happen, you set yourself up for failure. Guys, you will never know what's going to happen in the market. You'll never know if your trade's going to win or lose, which is why you have to focus on the rules, because the rules have been proven to win more than they lose. But when you believe you know what's going to happen, you set yourself up for failure when you take a loss, and when you don't care what happens. Guys, the trade doesn't matter. It's a collection or 20 to 25, not one trade at a time. All there are in the market is up and down ticks, and you don't control any of them. But emotional pain comes from what you believe. If you get mad, it's because you believed it should have won. And if you get sad, it's because you believed it should have won. And it's so important that you just focus on the method. Once you hit a loss, 10K, if I knew how to fix that, I'd be a billionaire, because everybody does it. So you do fine reading, right? But at the execution, you're all over the charts. So one of the things, 10K, and I say this, and I'm full of these little cliches, right, is your chart reading is what verifies that rules are met. And 10K, you've been with me long enough. You're a great chart reader. There's no doubt about it. You have 20 PA accounts. Okay, so let's talk about that. And I don't give trading advice, 10K. That's not my job. But let's talk about it. If this is the best you could do, how much did you make on that? You made $110? 120? I know. But how much did you make on this trade, 10K? I don't care. How much did you make on this trade? Pretend money. $112. Okay, so now hold on. I'm not done. Let's pull up Mr. Calculator. 112.50 times 20 accounts is $2,200. Times 5 days a week is $11,000. Times 4 weeks in a month is $45,000. Times 12 months in a year is over $500,000. So 10K, what's the challenge? And I'm asking, is it entries? Are you breaking rules on your entries? Because one of the things that you don't do, and guys, this is gonna sound, no, I've got a whole classroom. Okay, you can email me the explanation. But guys, here's the deal. 15 hours every week. 15 hours every week. I'm here live. And I'm here to give you feedback on everything that you do. And I'm here to give you feedback on everything. And 10K, if you had a very methodical plan for exit, the same way you had it for entry, this would have been a $300 trade, right? Which means on your 20 PA accounts, that's $6,000, which puts you at $120,000 a month from only $300 a day. So let me go back to this real quick. And guys, I can't fix you psychologically. I can't do it. If I could, I would fix every one of you. I promise I would, but I can't. So things that you have to know, guys. You have to know exactly why you'll enter, and everybody gets good at that. Everybody gets really good at entries. But you have to know why you're exit. And 10K, this is where most people fail. Is even when they take great entries, emotion takes over, fear takes over, greed takes over, hope takes over, wishing, wanting, praying. All of those things take over, and logic goes out the window because now there's something to lose. And there's that stupid little what if devil, guys. If you're not in a trade and your rules aren't met, the what if devil sits on your shoulder and says, hey, but what if this one wins? What if without the rules met, this one produces income? What if, even though you don't have advantages, it goes anyway and then you'll be left out, and you have to fight that little what if monster. And then the same is true on exits, right? What if, where's that picture? What if it reverses against me? Well, then I give it all back. What if it doesn't make it to the fib? Well, then I don't get paid. What if this fluctuation is really the beginning of a reversal? Shit, I better get out even though I have all these advantages. And 10K, it's a constant battle. It's a constant battle. And the easier you keep it, the more focused you are on knowing exactly what it takes to enter, and the more committed you are to following a very rigid plan, the less stress there is in trading. If you've gotten up to 20 PA accounts, you clearly know how to make money. You clearly know how to get to where you want to be, right? So now we got to repeat that when the pressure's on. So if you're in a high probability trend trade, what's it going to take to get you out? If you're in a 50-50, if you're in a momentum, if you're in HVA, this has to be so clearly defined and you have to trust it. And I don't think walking off from your family is the best path to success, but that's a personal opinion and not one that reflects Nexgen. So email me, tell me your story, man. I'll give you everything that I have, but guys, psychological's on you. I'll give you the best software in the world, right? I'll teach you how to read the indicators. I'll even give you a solid plan that wins more than it loses. you're going to have to figure out how to follow it. And that's the hardest thing. That is the hardest thing about trading, is doing absolutely nothing when there's nothing to do. And I see it every day. And I've seen it in myself, guys. You think, oh, I sit in front of this room and I never lose because I know this so great. No. I have bad days too. We all have bad days. We all have emotional days. And one of the best things that you can do is know exactly when to stop. To know exactly when you've given away too much and it's not working, and then just to shut it down and go back to simulator. And the same thing is know when your goals are met and shut it down and go to simulator, right? This is a business. And the business is about making money. So guys, I'll give you everything that I'm capable of giving you, but patience is something that you're going to have to work on your own. And then, Ollie, you thought you overpaid for the software until you started going through the education. Now you feel you overpaid for your MBA because you could have saved a lot if you found Nexgen sooner. I appreciate that. You should put that in a Trustpilot review. Yeah, we all do sometimes, 10K. We all do sometimes. Sometimes we need to be kicked in the teeth. And 10K, have you ever sat in a classroom that my brother's taught? He's very direct and not much for sugarcoating. So imagine being his sibling learning the software. My teeth were in a jar next to my desk for 6 months. And it works for me. It doesn't always work for everybody. I'm the more touchy-feely Novak. I believe in simplicity wholeheartedly, and it's been my experience in the last 4 years that the less people look for, the more they tend to find, and the easier it is. And there's probably a lot of people in this room that'll back me on that. And Ollie, so how long have you had software, Ollie? Can I ask? Because one thing that I see a lot, a few months, okay, that's awesome, is people come in and they try to do it their way. And that's cool, right? Oh, right on. So 10K, you know it works. You know it works. You're just learning to work it. I believe everybody has a thing, 10K, if that makes sense. But that's okay. But we all have our things. And do you know what I have on a piece of paper in front of me every day that I trade? Don't trade into terms. Do you know why? Because I effing love to trade into termination conditions. I don't know why. It's not even the checklist. So I know my rules, 10K, like the back of my hand. I know my rules inside and out. I could recite them. I've got them. I know, right? But here's the deal. What I also know, and let me do this. Hold on, where's it at? Let me find it. I'm going to do two things here. And guys, this is great because this is great conversation. And I really do appreciate this because I think this is what everybody needs to hear. So check it out. 10K, I've got my entries defined. I've got my entries defined. To enter from a top or bottom, this is what has to happen for me. And then because I know this is my thing, this is what causes the most losers for me, I have to put the things that take my success away from me, and I've got to look at them. I've got my rules, right? And then I've got the things that are my things. These are the things that I suck at. And I'll say it for what it is. If I'm going to break a rule, guys, these are the two that cost me the most money. So I've got them written in bold print on the bottom of a piece of paper sitting in front of me. And I've learned to talk to myself. All right, Mark, you think you see a trade, right? But that's not a strong bottom, so the 50-50 is off the table for you. Or if you're going to take it, I need a confirmation. And I go through this process every trade that I take, where I start looking for the things that are my challenges to try to beat that, right? You only started reviewing the education a couple weeks ago, Been distracted, too many softwares you thought were great. Ollie, we get that a lot. You know, and it's funny because with an 8 range, so 10K, what do your rules say for a 50-50? What are your exact rules for a 50-50? And that's probably a lot to type out. But if your rules say enter with a confirmation from the 8 range, then that's great. Then you're obligated. My rules for a 50-50 don't even go to a third chart. My rules say that if I don't have a strong bottom and divergence prints and I don't have strong triggers, I'm cool just sitting out. I just don't want it. How come? Because this happens more often than bouncing. And it's wild because you get to this trust point. All right. So let me know if you get the confirmation on the 8 range. Because right now you're beyond all the areas for entry, right? Right now you're on the wrong side of the triggers. You don't have areas. So just to share with you my plan, 10K, go back and study this. My plan says I don't care about one divergence if I'm coming from a strong bottom. If I don't have a strong bottom, it better look like this one, not this one. Does that make sense? But this is how plans are built, right? I don't need a third chart to tell me that I have a weak bottom. I don't need a third chart to tell me I have weak triggers and divergence. And it just kind of goes to this thing where I love a confirmation chart, but a confirmation chart has to be because the rules are met, right? So maybe you do have a strong bottom and maybe you have divergence and you're like, well, without these strong triggers, let me see what the 8 range says. But with divergence and weak triggers and a weak bottom, this might rock it up. Guys, it may go all the way to 82.42. But you know what? It's not my trade. It's just not my trade. And I'm okay with that. And that's what's difficult for most people. Is the idea that sometimes, even when you think it's going to do something, your rules don't support it. Even though your chart read has you chomping at the bit to go one direction, your rules don't support it. And guys, your rules have got to be your gospel truth. Your rules have got to be what you live and die by. You can have it, Steve. It's only NASDAQ. I don't mind sharing it, guys. This is exactly what I look for, and if you have questions about it, ask me. But you'll notice that the title of it is My Trading Plan. But there it is in the room for you, man. Let me know if you have questions. But it goes back to that divergence, right? It goes back to termination conditions. Guys, I got people in this room that trade in determination conditions all day long. I just don't. Because I don't make good decisions in determination conditions, right? Same reason I don't date redheads. I don't make good decisions when I date a redhead. Well, my wife would get pissed too, but when I was single. I made that mistake enough times that it just never worked out for me. So it kept me out of a loser here. And it meant that I didn't get to do it. So 10K, you say you think you're going on too many charts, looking after the fact, hoping this will happen again for sure. And when it happens and you miss it, do not hold long enough. Okay, I see exactly what you're saying. So let's do this just for grins. Oops, that's not it. Just a little insight, I think, on... So Let me find an example where the rules broke. So let's just say right here, 10K, you're like, oh, this is my rules, and I'm trading directly into a termination condition, and you see this after the fact, right? And you're like, oh man, look, it worked. I could have gotten paid. Is that fair, everybody? You're like, if I just would have taken that little snap back to the 1-to-1s, I could have made money. And you're looking at this one thing. And your brain forgets that termination stopped the market, and that one did, and these weak triggers did. And there's all these instances where rule number 2 worked beautifully and kept you out of trouble. And you just start getting excited. I think, I hope, I wish, I want. So what you've got to do is the high probability trend trade rules, guys, they're not based off that one time. They're based off that 1,000 times. You know, we've been teaching people to trade for over 27 years now. That 1,000 times the rules were met, it won 800 of them. So that's a statistical advantage. And I don't even know if that's a real word, to be honest with you. That's an advantage proven to win more than it loses. And that's how rules come to be. And so you'll go back and see it worked. Mid-band fib on large chart, it's good reversal. Start making that one a trade too. So what you have to do, 10K, is you have to go find 100 pictures of it. Creating trading plans is work, guys. I don't think you guys realize how easy you have it. You have to go find 100 pictures, and not that are almost the same, that are exactly the same conditions. Did it win more than it lost? Does trading into a termination condition win more than it loses? No. Does trading from the wrong side of favorable large triggers win more than it loses? No. But does it win enough to make you want to break your rules? Hell yeah. Because we're all human and we feel like we're missing out. So 10K, if you want, and I'm not telling anybody, I never tell people how to trade. That's not my business. My business is to teach you how to read indicators. But one thing that I give every day is a plan that has been proven to win more than it loses, a plan that optimizes your chances of success, a plan that teaches you to be patient, that defines exactly what it's going to take to get you where you want to be. So maybe if you're having confidence issues, if you're looking for too many things, if you're using too many charts, something like the KISS plan gives you an awesome opportunity to refocus. You don't have to. But what do they say the definition of insanity is? Doing the same thing repeatedly, hoping for different results. And the KISS plan is designed to bring you guys back. So, true story, I had a gentleman call me. And I had one of the salespeople go, Mark, can my guy call you? And I said, yeah, absolutely, let him call me. And he goes, Mark, I can't find any effing trades in this market. I trade 100 times every day. I try. So 10K, if you make it to 7,500 without range charts, why on God's green earth would you reintroduce the range charts at 7,500? Why would you go back to that toxic relationship if you've proven that you can do it without it? Because more is better, right? Because if 2 charts is good, 3's got to be better. Jen, you're on delay. But that's one of the things that we do as humans, 10K. If 3 rules is good, 7 rules has got to be great, right? Oh, just an example. No, Paul, it's directly into a termination condition, but it went up anyway. So this is where people convince themselves that they need to trade into termination conditions because 5 minutes ago it worked. And rather than Don't do that. Rather than scrolling back and seeing all the times those termination conditions kept you from taking the wrong trade, you see after the fact entries, right? I had a guy that used to post in the room 10K, and he would do this. Okay, this is my most current bar right here. Let's just take it out. And he would go, oh yeah, Mark, so I would have gone short right here at resistance because resistance is really cool. And then I would have exited right here because there would have been a little snapback. And then I would have got back in here, and then I just knew that the market was going to reverse here. So I made like $1,000 here, and then I went long because long is so cool, and I held it forever, and then I added on 100 contracts here, and I'm telling you, Mark, I'm up like $73 million in the last 12 minutes. And he has this simulator hard on. And none of it's factual, none of it's repeatable, none of it has advantages, none of it has rules. It's easy to go back, right? Oh, check it out. I also went short right here and got out here and added on here and got out here and just reversed my position because I don't know if you guys know it, I'm pretty kick-ass, and ran it all the way up to resistance. And guys, that's no way to do it. So when you go back historically, what do you have to say? Were my rules met? Were my rules met for a trend trade here? No. Were they met for a 50-50? No. What's likely to happen from a bad bottom of 50-50 with divergence? Well, it's likely to overrun. And it's not the one time, right? It's the 50-50 that failed here. Let's go look at some failed 50-50s just for grins. Let's look at this one, and let's look at this one. Where's another failed 50-50? And let's look at this one. So I want you to see something, 10K. I hope this is impactful. "50-50 failure with divergence. "50-50 failure with multiple divergences. I think that was just the entry that we circled before. There was one more. 50-50 failure with divergence. Does everybody see that? What did I do? I went back and I circled 50-50s that failed. And then I went to my small chart and every one of them had divergence. So 10K, I can surmise from my historical study that on a 50-50 with divergence, the likelihood of success goes down. And then the yellow bar, you know that John took the yellow bars out, 10K? They're not even in the templates anymore. So it starts with the rules. What are my rules for a 50-50? Were they met? And then you have to go through and grow from there. So oh my gosh, GWC, I have no idea. So GWC, this would be the equivalent of asking me to solve an algebraic equation. Jason's your guy. I wish I could be more helpful. I have no idea. Let Jason jump in and take care of that. So let's look at this one. Smalls didn't break, right? Pulled right back to resistance right inside of triggers. I don't have a trade here, guys. It might still go down, but I don't have a trade there. And the reality is you're an octopus on a roller skate. I like that. That's a good visual. So the one thing that I find, and I'm just throwing my own mess out into the fan here. One thing that I find is that when I take 20 to 30 trades a day, I struggle. when I take 4 to 5 trades a day, I typically win. Because one of them, I'm trading maybes. One of them, I'm probably going into termination conditions, and I'm letting my chart read tell me, well, it might break. And I'm trading might instead of rules. And I don't know if anyone else does this. And guys, there's a lot of mights in the market. There's a lot of coulds. There's a lot of... It's easy to say with this level of momentum and the large triggers are almost through, it's easy to get married to a long trade, right? And your chart read says, and guys, I'm telling you, if you showed me this right here and only this chart, my instinct would be, hell yeah, that's an area with the potential to break. That's an area that's likely to go, right? And my chart read says, hell yeah, go long, go long, go long. Don't you dare miss that long. Oh my gosh, look at that look. But my rules say, Mark, don't do it. And that's where you can't confuse your read with your rules, if that makes sense. And that's one of the reasons why I focus so heavily on rules. And keep it simple, keep it focused. And guys, everybody bounces back. 10K, everybody bounces back. And it's usually taking a step backwards that gets you going towards success. And then Jen says, Mark, that's the perfect termination because she's on Australian time via Europe with a layover in Italy. We have different midnights. Perfect termination, right? So yours said just don't do it. Ours said 50-50 with divergence. So either one was no trade, but I guarantee someone in this room took the long. I guarantee someone in this room tried to go long there and it didn't work out, and they may not show it. But dollars to donuts, somebody went long. So Jen, did you go short at 96 then because of the strong top? On the pullback to the small triggers on the large chart and the mid band at the triggers here. Did you take that one? You were on a call. Well, it worked out because the rules weren't met. But some people will start to take chances, right? The read said down. The rules said don't do it. Isn't that crazy how that works? Hey, Ken, and have a good one, man. Thanks for being here. It hasn't been the most stellar day, right? No strong TP on yours. Termination. No strong triggers. This right here should keep you out, right? Nothing broke support at all. Not a strong top. I got you. But even no matter what happened, right? So check this out, 10K. If you had to say to yourself, honestly, and let me make this really big. If you were trading anybody's money but yours, is that your best look for a short? Without the small triggers even breaking. If you were trading your uncle's money, if you were trading your father's money, if you were trading your kid's money, would that be the right trade? Would that be a good looking short? And the answer has to be no, because it's a termination condition, right? It's not struggling, it's doing whatever it does. But the challenge is, 10K, is that this is the large chart, is that when it's your money, for whatever reason, we're willing to take these chances. We put so much value, right? I don't know about you guys. I'm a rule follower at work. When I was working for people, I was a rule follower. I would do my job better than anybody. I would follow the rules. Hell, I wrote the rules. And man, you couldn't freaking stop me. You couldn't get me to deviate. If there was a recipe that had to be followed, it was followed. There was no gray area because rules are established for a reason. And then when I started trading, what I found is that I didn't have the same respect for my rules. I didn't have the same respect for my plan that I did for everybody else's. And it was weird. It's a weird phenomenon. It's like we don't mind hurting ourselves, but we refuse to hurt other people, right? Hopefully that's human nature and we're all inherently good. And we're just stuck right now, guys. We're stuck in areas. And how long have we been stuck? We've been really no trade rules met for the better part of a couple hours. I think the last good-looking trade was somewhere back here, maybe? Where was that short? Right there. I think that was the last good-looking trade. But the cool thing is that if everybody made $400 or $500 on it, you don't care. You just don't care because you waited for the best trade and you took it. Let's see what gold did. Bad top, 50-50. I wonder if there was divergence on that 50-50. Gosh darn it. Check it out. Divergence on a 50-50, guys. Do you see it? And you're absolutely right, Jen. Trying to recover, because it only takes one trade, right? It just takes one trade to get it back. Let me take that trade and then it loses. Well, all I have to do is take one trade but double my contracts and then I can get it back. Well, all right, it's going to take two more trades, but if I triple my contracts and I get lucky into this termination condition, well, then I'll be fine. And then you're just out of the game. And then you take 30 trades. Yeah, so it's just one of those things, right? 50-50 with divergence. There was a 50-50. Did it have divergence? It didn't. It didn't have divergence. But what did it have? It had a reversal bar. So worst case scenario, it's a tiny little loss when it fails, right? Do you see that? So if you have a very pragmatic management plan, you didn't lose more than 5 ticks. And 10K, I want you to understand that you're not alone. I can't stress that enough. You're not alone. Every trader that I've ever met struggles with that a little bit. You just like hearing my voice? God, I don't know why. I think I sound funny, but nobody likes their own voice. So when I was a personal trainer, guys, I had an angry wife call me. I trained her husband, super nice guy, and we were all friends. We'd go out, hang out, dinner, and stuff like that. And she calls me one day, and I pick up the phone, and I'm like, "Hey, what's going on, Tanisha?" And she goes, Mark says, Mark says, Mark says, and she said it like 5 times. She goes, "I swear to God, Mark, if I hear Mark says one more time, I'm driving to your house and punching you in the nose." Because her husband kept saying, Mark says, Mark says, Mark says, Mark says. But what it did is it kept him on track. Because he was holding himself accountable to my instruction. So maybe you guys that blow things up, pretend that it's my rules that you're following, and I'll be your disappointed grandma if you don't follow them. See if that works. I don't know. I don't know if that's a real viable option. But psychology is huge, and we could talk about it all day long. In 10K, I'm sure that in some capacity, as long as you've been here, John's dropped this in your lap. Emotion-free trading, though, I love this one because there's one key phrase in it that just rings, and it's, am I acting in my best interest? If I'm trading into a termination condition, am I acting in my best interest? If I'm trading without momentum, am I acting in my best interest? If I'm trading with divergence on a 50-50, am I acting in my best interest? If I'm not exiting in areas, am I acting in my best interest? And it rang true, and I traded outstanding. And then, just like anything, you start making mistakes, and you have to go back. Jen, I learn every day. My brother and I talk all day, every day. And right now, one thing that we're working on together, because the funding firm, guys, is going to have access to TraderView. And I don't know if you can see my pictures, but TradingView, I have probably already taken 100 pictures of TradingView, and I'm developing plans for the people that are going to use that. And what is today? Today is the 15th. I mean, shoot, I'm already 15, 20 pictures deep today. Guys, I take so many pictures every day. And eventually you just can't help but learning. So if you're struggling, don't be dejected. But remember, Simulator is a great place. And then 10K, on that same note, and everybody, if you're struggling right now, whether it's mental or whatever, thank you for that, Jen. It's okay to shut down 19 of the 20, right? Prove it on one. Prove that you got this on one. And 10K, I know that you got it. You know exactly what to do. Focus on doing it for a little bit. Say for 5 days, all I'm going to do is follow my rules. For 5 days, I'm going to make $400 in the market, and then I'm going to shut it down. For 5 days, I'm going to XYZ, right? And focus on this crazy adherence. You don't need 20 accounts. You need to be successful in one, and then you're spreading that success over the 20s, right? There's no reason to spread that struggle over 20. I'm not telling you not to. I'm not telling you to. $10K, you made a $10 million goal. You didn't ever make a penny yet, as you wrote it from time to time. Why would you have such a goal like that? Holy shit. I'm going to make $1 million. Or let's make it even more simple. Watch this. I'm going to make $250,000, right? Let me back up for a second. Check this out. But you're not focusing on the process, you're focusing on the money. I can say I'm going to make $250,000, or I can say I'm going to make $100 a day across 10 accounts. Which one's easier? Which one's less stressful? Which one doesn't put pressure on you? 10K, I'm sure you are a chiseled Adonis, but I had to lose weight once, and I was a big fat blob of a man, and I'm not proud of it, and maybe those words are hurtful, and I had to lose 50 pounds, and I said to myself, I gotta lose 50 pounds. I've gotta lose 50 pounds. You're still focusing on the money, 10K. And I didn't. And I lost 4, and I got frustrated, and I quit. And I put 10 on. And then I lost 2, and I got frustrated, and I quit. And I put 10 on. And I lost 3, and I got frustrated, and I quit. And I put 10 on. And I had to change my thinking. And I changed it to, I'm going to lose 2 pounds a week. I'm going to lose 2 pounds a week. What if there's 4 trades? 10K, what if there's not 3 trades? What if your rules aren't met 3 times? Are you going to try and make those last 2 so you don't miss out on your allotment? Does that make sense? So do this. I'm going to follow my plan. And if you need to simplify your plan, simplify your plan. I'm going to follow my plan this week. I'm going to focus on one trade, and I'm going to kick its ass every day. I'm going to focus on one process this week. I'm going to focus on losing 2 pounds a week. And you know what? By the end of the year, I'm down 100 pounds. Focus on the process, Ollie. That's it. The process yields results. When I go to the golf course, it's not my desire for a birdie that gets me a birdie. It's my swing mechanics. It's my aim. It's whether I get it to the green, whether I make good contact, right? It's the function that creates the results, guys. And so often we get so hung up on the money that we forget what creates the money. Uh-oh, John Novak's going to impart some wisdom. He jumped in my room. I see him typing. Bobby's had to delete his response 10 times. It's fun when I can see you guys typing. Process yields results. Here we go. I told you it was coming. Personally find that forcing 3 trades a day is just a cop-out for choosing not following rules. If all the rules are perfect, take the trade. Stop worrying about how much you make, lose, or how many of them there are. If there are 20 trades, that's a perfect day. Why stop at 3? I know, you look at the P&L each minute. Check this out. Did you know you could do this, 10K? I'm just going to go long real quick, guys. This is not a rules-based trade. So, 10K, look at that. 20, 0, maybe it's good, maybe it's bad. You can right-click over here and go to Properties and put None. And don't show realized P&L when flat. And now when you're in a trade, you don't know where you're at. The only thing you know is where you're entered, where you're trying to get to, right? And of course you'd want to do the same thing over here. I would just hide that or do the same thing over here. But now there's no ups, downs, anything like that. And then Bobby, it really made a difference in your trading. You stop at 300 per account. You trade them separately, so you're always trading an account. Your account started climbing when you started doing that. Too many times you'd keep trading in them and end up negative for the day. Amen. We did this the other day and everyone's like, holy crap, you can do that? And then when you close out, it doesn't show you where you're at. I didn't either until a couple weeks ago, 10K. So there's little mental tricks, right? Stuff like get rid of your small chart until your large chart says the rules are met. Don't get suckered into beautiful looking entries when the rules aren't met, right? I know that there's people that do that. There's people that do what Bobby do. $300 and shut it down. That's it. I'm done. No more. If you guys have ever watched Ron C in this room, at 10:30 a.m. almost every day, he says, all right, I'm going to the beach for a chili dog. I hit my goals. I'm going to go live life. And humans are greedy. We're all greedy. We want to make all the money. You don't have to make all the money. You only have to make some of the money, right? I had someone tell me, Mark, I have to make $300 a day to replace my teacher's salary. And by the way, if you're in Florida, shame on you for not paying your teachers more. But she said I have to make $300 a day to replace my teacher's salary. I was like, that's amazing. Once you're making $300 a day, do it on 2 accounts. And then it's $600 a day, right? And that's $150,000 a year. The money is a byproduct. The money is nothing more than a byproduct of the process. Focus on the process. My rules aren't met, I don't have a trade. It's that simple. My rules aren't met, I don't have a trade. How easy is that? It's almost too easy. Feels criminal, right? Feels criminal. Someone said the other day, Mark, it feels like cheating when I follow my rules. I love that. Gary, your mind wasn't in it, right? You weren't focused on it. You were thinking about other things. Awesome. Jen, scratch him behind the ears for me. I do love dogs. Have a great afternoon. I'll see you in the morning. So, John, my friend Christine is 20-year. She was the dean of a high school. Under 80,000. They don't give raises in Florida. That's the challenge. They don't give raises in Florida. Trust me, I heard about it yesterday. She's 20 years in. No. Maybe it depends on the county. That's higher education faculty, John. That's college. She teaches high school. Not anymore. We're going to make her a trader. Damn it all. So guys, we just spent a whole hour not really talking about trades, but talking about the mentality going into trades. So I think that's pretty cool because that's a part of it. It really is. We're going to come back tomorrow and we're going to talk about rules again. We're going to talk about advantages. We're going to talk about keeping it simple. If you're struggling, keep your chin up. Simplify. If you're struggling, simplify. Telling you. It works. You just got to learn to work it. You got to find your path. You're welcome, Steve. Bobby, good seeing you, man. It was an interesting session, wasn't it, Ollie? Guys, I'm not a psychologist. I don't do anything in trading psychology. I'm definitely a cheerleader. I'm rooting for every one of you, and I'll do everything I can to get you where you need to be, even if that includes sharing some of the mistakes that I make. You're welcome, Paul. Guys, I will see you in the morning. If you trade this afternoon, trade well, take pictures, annotate charts. Keep it simple. I'll see you guys in the morning. Take care, everybody. You guys be good. I'll put today's classroom in the room in just a minute.